We allege that he defrauded lenders to Alameda Research, his proprietary hedge fund. Third, we allege that he defrauded investors in FTX. And lastly, we allege that he violated campaign finance laws. Now, let me say a little bit more about what we allege in the indictment. First, we charge that from 2019 until earlier this year, Bankman-Fried and his co-conspirators stole billions of dollars from FTX customers. He used that money for his personal benefit, including to make personal investments and to cover expenses and debts of his hedge fund, Alameda Research. Secondly, and relatedly, we charge that Bankman-Fried lied to Alameda's lenders about the source of the money that he was using to pay those debts. Third, we charge that earlier this year, in the midst of the crypto crisis, Bankman-Fried lied to investors in FTX about the fact that he had sent billions of dollars in FTX customer money to Alameda. And fourth, we charge that Bankman-Fried violated federal campaign finance laws by causing tens of millions of dollars in illegal campaign contributions to be made to candidates and committees associated with both Democrats and Republicans. These contributions were disguised to look like they were coming from wealthy co-conspirators, when in fact, the contributions were funded by Alameda Research with stolen customer money. And all of this dirty money was used in service of Bankman-Fried's desire to buy bipartisan influence and impact the direction of public policy in Washington. To anyone who is watching this or hears about this prosecution, if you believe that you have been a victim of these schemes or you have information about the conduct that we've alleged in our indictment that we've unsealed today, please let us know. To any person, entity, or political campaign that has received stolen customer money, we ask that you work with us to return that money to the innocent victims. And to anyone who participated in wrongdoing at FTX or Alameda Research and who has not yet come forward, I would strongly encourage you to come see us before we come see you. Now, let me say a word about our partners at the FBI, the SEC, and the CFTC. The women and men of the FBI are some of the finest public servants in this country, and they have been with us since day one in this investigation, and there is no one better to work with. I want to thank the brilliant lawyers at the SEC and the CFTC. This investigation is complex and it's sprawling. We embrace that kind of challenge here in the Southern District of New York. And we always want the CFTC and the SEC by our side when we're doing that. And finally, I want to thank the career prosecutors from my office handling this case. Nicholas Rose and Danielle Sassoon and their supervisors, Scott Hartman and Matthew Podolsky, the chiefs of our Securities and Commodities Fraud Task Force. I want to acknowledge the contributions and hard work of the prosecutors from our Money Laundering and Transnational Criminal Enterprises Unit, including Samuel Raymond and Thane Wren, and their chiefs, Jessica Feinstein and Tara Lamort. And I want to acknowledge the contributions from the chief of our Public Corruption Unit, Rebecca Donaleski. This should be very clear, but it's an all-hands-on-deck investigation here in SDNY, and I couldn't be prouder of the team that I'm privileged to lead. I now want to invite up to the podium FBI Assistant Director in Charge, Michael Driscoll.
All right, everybody, you are listening and watching Bloomberg Business Week on Bloomberg Radio right now. You were just hearing from the Southern District of New York, U.S. Attorney Damian Williams, outlining the charges against Samuel Bankman-Fried, of course, founder of the now collapsed FTX. He did make comments, that is, Mr. Williams, saying that the investigation into FTX and Samuel Bankman-Fried is ongoing and moving quickly. He said this is our first public announcement, but it will not be our last. He talked about the investigation being complex and sprawling. And Timmy talked about 4 areas of misconduct, specifically about defrauding FTX customers, defrauding investors in FTX, violating campaign finance laws, also talking about the relationships between the various entities of FTX. Keep in mind, this is coming on a day, and this is following similar charges, separate lawsuits by both the FCC and CFTC. And we now know the now appointed new CEO of FTX, John Ray, was up on Capitol Hill taking questions from lawmakers earlier today. That really was a big focal point for all of us in the financial market and business community, certainly here on this Wednesday.
Carol, a couple things in addition to what you said sticking out to me just now, hearing from U.S. Attorney Damian Williams. He said that if you believe you've been a victim, any person, entity, or campaign that has received stolen customer money, get in touch, reach out to us, and then anyone who participated in wrongdoing who has not yet come forward, come see us before we come see you.
Yeah, and I think an interesting part of all of these cases is the talking of buying of influence, and that has to do with money that was spent certainly in the lobbying and pursuit of FTX and its endeavors. So that is something that will continue to be looked into by regulators. All right, no doubt about it. This is one of our, if not the most read story, several stories on the Bloomberg, but also very top and high of import is what's going on with inflation. We saw it come down thanks to that latest CPI print, still high by historical standards. And this is coming one day. We are less than 24 hours away from that latest FOMC meeting. And we've been talking about that with our own Michael McKee. He is Bloomberg News International Economics and Policy Correspondent, along with Steve Skanke, who is Chief Economic Advisor at Keel Point, former U.S. Treasury and White House National Security Council staff member. So we were talking with Steve. Steve, let's go back to you. Let's do a reset. We talked with Mike a little bit, but your thoughts on today's CPI print. You don't think it necessarily changes much for the Fed, is that correct?
I think the Fed will continue to be pretty hawkish. They're going to raise rates by 0.5%, which is what they've telegraphed already. But they're very sensitive, and Chair Powell is particularly sensitive to the idea that the Fed is making a dovish pivot. So they want to dispel that. They want to use that as forward guidance in rates continuing to rise, probably above their higher the peak that they had put out in September. So I don't think that the Fed is going to do anything differently than what they've said, and they are going to still continue to be hawkish, at least until they see another month of inflation data.
Hey, Mike McKee, come on back in here. I'm interested in what Steve just said about the Fed continuing to be pretty hawkish here. And I'm wondering, if you're Jay Powell, what are you thinking when you see a rally like we saw this morning? And yes, it's lost steam, but risk assets were absolutely rallying on that softer than expected print.
Well, they know that's going to happen when they get good inflation news, and they're hoping to get the good inflation news. But the message, as Steve says, is not really going to change, that we're going to keep rates higher for longer in order to make sure that inflation continues to come down. The markets did price out a little more of a Fed peak today, coming down from about 4.98% in May to 4.84%, and then now pricing in a 50 basis point cut from that level by the end of the year. So Powell's goal is going to be to maybe try to talk them out of that and get the market back to a little tighter position so that the Fed's medicine can continue to work.
Mike, based on your, expertise with watching various economies over the last few decades and, of course, seeing different cycles, I mean, how does it feel right now in terms of this economy? Are you seeing the momentum significantly slow?
No, and that's the interesting thing. The economy seems to be going still very good. You had that United Airlines purchase of 100 Boeing jetliners today for an enormous amount of money. That's the kind of thing that's going to keep people in Chicago and Boeing's other factories employed. And so, what happens to the economy if there is still a lot of demand and we don't see companies starting to lay off people, and we may not see huge layoffs because there's a shortage of workers? So does that mean that inflation stays high because we're having to pay up to get workers, or does it mean that we see a lot of this transitory stuff start to go away and inflation can come down? It's hard for the Fed to know, which is why they want to keep that message of rate discipline before the markets.
Steve, I was thinking about 60 Minutes. They did a nice deep dive with Janet Yellen, of course, of the U.S. Treasury, and all of the things that they're dealing with right now. If you were at the Treasury right now, would you be telling your Treasury Secretary, hey, guys, get ready, we've got a recession coming and it could be a problem?
Well, I would certainly be telling them to continue to be alert, because it's a possibility when you look at the Conference Board Leading Indicators Index, the inversion of the yield curve, now even more deeply on the 10-year, 2-year, and the 3-month, 10-year in inversion territory over the last several weeks. So the markers are out there. But as you pointed out, the news is actually pretty good, and we may not get a totally soft landing, but it's hard to see that it's going to be a material recession that's going to have a big impact either on profits, production, jobs, or consumer spending.
What do you mean by that, Steve? Like, we're talking, just a few 100,000 jobs that are lost in a recession that we could see in 23?
Yeah, that's all it may be. When you look at the consensus forecast for negative growth in 2023, none of it is above -1% in any quarter. It's like -0.2, -0.4, and with just different parts of the economy continuing to gear up, we might have very low negative jobs if we have them at all. It's certainly a very real possibility as we look out right now.
Right, things can change. Hey, you know what? I love when we've got two folks like you, Steve, and Mike McKee. And I'm curious, Mike, if you've got a question for Steve, and then I'm going to put it to Steve if he's got a question for Mike, because you guys are so in the trenches on this.
Carol.
Mike, you first, in terms of what you want to know from Steve Skanke.
Well, I would ask Steve the question that everybody always asks me. That is, if you were in Jay Powell's news conference tomorrow, what would you ask him? As an investor, what would you want to know?
Well, I'd want to know really how he feels about where the inflation rate is going. He's got to be excited about the good news. But at the same time, remember, in August of 2021, he got burned by the head fake of inflation, looking like it was starting to abate in his famous transitory speech. So maybe the question is, do you think that the downward trend in inflation right now is actually the real deal? And at what point will you be confident enough to actually pause the raising of interest rates to see what the accumulated impact of the tightening has been?
Right, Jay Powell doesn't want transitory 2.0. All right, Steve Skanke, our last question to our Mike McKee. What do you want to know from Mike, who is just, man, when we want to know something about the economy, that's where we go.
Well, I would ask, where do you think is the greatest vulnerability to financial markets for what we see in treasury rates and profits broadly across the U.S. economy?
Well, I would start with the idea that recessions are really about confidence, and we don't see a big diminishment of confidence so far in terms of the markets or in terms of the overall economy. So you'd watch for that as a sign that maybe CEOs or consumers are starting to get worried. We did have some trouble with the auctions yesterday. Does that suggest that we're going to see more liquidity issues, especially if the Treasury still has to keep funding, or if they have to cut back because of a debt ceiling issue? But I think the bottom line is you kind of come to the conclusion it would be something exogenous at this point. It would be something we're not thinking about, like the war that came up this last year, or it could be something that is brought about by the politicians. But you have to wonder if there's anything that's really going to take us there in the linear fashion that we're going right now, because things have been going pretty good. And the one interesting thing here, and I would say this, Carol and Tim, that people don't think about is we talk a lot about what has unexpectedly gone wrong. It is also possible that things can unexpectedly go right. And maybe the Fed will be able to pull off at least a semi-soft landing. Maybe earnings will stay reasonably strong.
I love that. Glass half full. Love it, Michael McKee.
What a nice note to end on, Michael McKee. Thank you.
Two great minds to talk about that CPI news and the Fed. Guys, thank you so much. Of course, our thanks to Steve Skanke, Chief Economic Advisor over at Keel Point, former U.S. Treasury and White House National Security Council staff member over in Washington. And that's exactly where our own Mike McKee is today. Mike, of course, Bloomberg News International Economics and Policies correspondent. He'll be there with our surveillance team all over that FOMC decision tomorrow.
Well, the other big story that we're following, of course, is the continued fallout from the collapse of FTX. Just hours after the arrest of the man behind it all, Sam Bankman-Fried, SBF charged with 8 criminal counts, including conspiracy and wire fraud, for allegedly misusing billions of dollars in customers' funds before the spectacular collapse of his crypto empire.
So let's get to it and let's talk about what's going on in terms of crypto. John Ray, of course, was appointed as FTX CEO as the crypto walls came crumbling down. He did not mince words earlier up on Capitol Hill before lawmakers. All right, well, check out John Ray. You can find all of that certainly at Bloomberg.com. He had a lot to say this morning. We've also had more news involving the crypto world. Right now, let's get into it. We've got a couple different sides covering the legal aspect of the story. Bloomberg News bankruptcy reporter Stephen Church via Zoom from our Wilmington, Delaware bureau. And then on the crypto side, we've got Bloomberg Markets senior reporter Katie Greifeld. She's here in our Bloomberg Interactive Broker studio. Hey, Stephen, let's go to you first. In terms of legally, what is facing Samuel Bankman-Fried and FTX? Lay it out for us.
Well, Sam Bankman-Fried is going to be facing criminal charges, obviously, related to fraud that apparently go back to the very beginning, according to prosecutors. On the bankruptcy side, he'll just be facing the usual thing of does he have any money that they can get their hands on?
All right, so, okay, it sounds like a lot, and we see certainly regulators continuing to weigh in on this. Where do we go from here? What's next in terms of the time clock?
If you're talking about the bankruptcy side, where the money is, the hunt for the money, that's what the bankruptcy is mostly focused on. The first hump is going to be a fight over something we talked about last time I was on the program. Mm-hmm. Where should the focus of the court system be? Should it be in the Bahamas or should it be in the U.S.? Right now, it's in the U.S., clearly. The Bahamas are arguing that that all the land that FTX bought and created their headquarters on in the Bahamas, all of that should be regulated by a Bahamas court. And that's their first attempt to try to break this solid control of the bankruptcy assets that the U.S. court system has right now.
Hey, Katie Greifeld, come on in here because we just heard from U.S. Attorney Damian Williams moments ago, who said that the FBI, SEC, and CFTC have been working, quote, around the clock to figure out what happened at FTX since the company's public collapse. What did you make of the, the indictment that was unsealed a little earlier today?
It was pretty harsh. I mean, we're talking about, 8 counts of wire fraud and conspiracy. So we'll see also if Bankman-Fried is ultimately extradited to the U.S. So there's a lot of moving parts here. I think that even though, obviously, he didn't testify today at the House hearing, it was still so wild to watch. And John J. Ray III, obviously the CEO of FTX now, who formerly had liquidated Enron, he did not mince words. I don't know where you guys want to start. It was wild.
Well, tell us how are you thinking about this? And I was thinking about you and the team. Like, it's just nonstop in terms of headlines coming from different regulators, different lawsuits. Kill me if you want. But I mean, part of me is like, was this someone who really didn't understand what he was doing? Or did he, maliciously, and at least based on these cases, it feels like there was intent at this point?
That's something that I think everyone is trying to figure out. That's a question I've been asking myself since, basically early November. John J. Ray basically said that Bankman-Fried was incompetent. And just the details that continue to come out, even though we've been hearing about this every single day, Ray saying that this company was uniquely positioned to fail FTX. When you think about the record keeping, we talk a lot about wallets in the crypto world, the difference between a hot wallet and a cold wallet. I won't get into it, but basically hot wallets are connected to the internet. That's what FTX had. And Ray said that for a lot of these hot wallets, the company's keys weren't centrally located, and sometimes they were located in just plain text. So the record keeping, the security, it was just non-existent.
It was remarkable to hear the word unsophisticated being ascribed to people who were, just months ago being described as wonderkins and, had come from Ivy League backgrounds and backgrounds including MIT and Stanford and more. I do too, Carol.
In different walks of life.
Hey, Stephen, come on back in here because I'm wondering about something that we just heard from U.S. Attorney Damian Williams and the idea that if this money flowed everywhere, including to people who have foundations, people who got donations, politicians who got donations, foundations that were set up, pandemic preparedness, the list continues to go on. He said that, get in touch with us. and let us know if you've received this stolen customer money. That's how he described it. Should these individuals, these foundations, expect that these funds are going to be clawed back?
They might have to face that. They also don't have to actually get in touch with it if they don't want to. They have.
They don't have to get in touch.
Well, I don't see any legal reason why you would have to say, "Hey, I got money." If you want to voluntarily give it back, of course they'll gladly accept it. But they have to actually show that it was inappropriate for you to get it to begin with, and that's going to take a court fight. And you have the right to, defend yourself in that situation. And there'll be a lot of the people who got this money that got enough of it so that they'll fight to keep it. It happens quite often in bankruptcy.
I do wonder about. Oh, go ahead, Stephen. Go.
Well, one of the things that you were mentioning earlier about Sam Bankman-Fried involved whether he was intentionally committing fraud or whether he was just ignorant about it. There was a key moment in the key filing this week in the bankruptcy court that sort of leans toward intention, and that is he went into the crypto systems, went into the computer systems of FTX, allegedly, according to the John Ray and Company, and minted a bunch of new coins worth hundreds of millions of dollars, and then turned those coins over to the Bahamian regulators. That was after a U.S. judge had already accepted the bankruptcy case and essentially ordered a halt to any withdrawals or anybody touching money that belonged to FTX or creating new money. So that would be a direct violation of something called the automatic stay in bankruptcy. It's a big no-no, and it's going to get explored more thoroughly soon.
Well, Katie, I think, Katie, he was even tweeting about creating new, and forgive me for using this term, but creating additional magic internet money out of thin air just in the last week or so as like a one way to solve this.
I know. I mean, I'm not going to opine on the tweeting strategy, but it is. I mean, that detail alone is just pretty shocking. The whole thing is shocking, and I don't know. Is he going to stop tweeting now? I guess this is finally it.
What does this mean for crypto? I'm looking at a day where Bitcoin's up 3%. So how do you guys slot this against the crypto world? And I use crypto always loosely.
I mean, Bitcoin's a macro asset. I feel like there's no more stark example of that than today with all this legal drama. And then you see Bitcoin ripping higher because we got softer than expected CPI. Just is proof of that it's correlated more to stocks than anything else.
But it's outperforming stocks right now.
It's outperforming stocks right now. It's a leveraged bet on stocks. So there you go.
I heard something earlier this morning, I think, on surveillance, and they were saying, this is an entry. Maybe it was Shinali talking about it. I know Shinali's been in Washington. This whole idea of just that maybe the financial establishment, this gives them inroads just quickly.
Just quickly, in inroads in terms of what? I'm sorry.
Like your JP Morgan and stuff, to really kind of take the baton and run.
If they have the desire to do that, yeah, a lot of the big players just got knocked out.
All right. Katie Greifeld, thank you so much. Stephen Church, bankruptcy reporter at Bloomberg News. Let's go to World and National News. Nancy Lyons in D.C. Hey, Nancy.
Thanks, Carol. Sam Bankman-Fried, you've been talking about him. The former CEO and founder of cryptocurrency firm FTX did not testify at today's House Financial Services Committee as expected because he was taken into custody last night and now faces a range of charges, including wire fraud and money laundering. Damian Williams is U.S. Attorney for the Southern District of New York.
We charge that from 2019 until earlier this year, Bankman-Fried and his co-conspirators stole billions of dollars from FTX customers. He used that money for his personal benefit, including to make personal investments and to cover expenses and debts of his hedge fund, Alameda Research.
Williams also urged those who may have been victimized by Bankman-Fried to please come forward. While the current CEO of FTX, John Ray, was on Capitol Hill today explaining why the company failed.
The FTX group's collapse appears to stem from absolute concentration of control in the hands of a small group of grossly inexperienced and unsophisticated individuals who failed to implement virtually any of the systems or controls that are necessary for a company entrusted with other people's money or assets.
Once he took over FTX, Ray filed for Chapter 11 bankruptcy. In a breakthrough discovery, Moderna's experimental cancer vaccine reduces the risk of relapse or death from melanoma when combined with Merck and company's Keytruda. The two therapies cut the risk of death or recurrence of the lethal skin cancer by 44%. At the World Cup, Argentina has just scored against Croatia. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The CPI report is behind us. The focus now on tomorrow's Fed decision. Stocks are moving higher, but we are well off session highs. The Dow, the S&P, NASDAQ, all in the green right now. Volatility gripping stocks as investors consider whether the latest data showing prices rose less than forecast last month will prompt the Fed to alter its aggressive approach to battling inflation. S&P up by 0.8% right now, up by 32 points. The Dow up 111. That is a gain of 0.3. NASDAQ up 124, higher now by 1.1%. The 10-year yield 3.50% with a 2-year yielding 4.22%. Spot gold up $29 the ounce to $18.10, up 1.7%. And West Texas Intermediate crude up 3.3%, $75.57 a barrel. Bitcoin up 3.2%, 17,734 on Bitcoin. OPEC is urging vigilance and caution on its members as it reduces estimates for the amount of crude that the group will need to pump in coming months. Amrita Sen is co-founder of Energy Aspects in London, and she told us this morning the next big story for oil is the reopening of China.
It's been 3 years, come February, that China would have had COVID. We've seen the kind of pent-up demand in the West when the West opened up, and you're talking about billions, 1 billion plus people. The pent-up demand is going to be huge, and it's the multiplier effect. The impact it's going to have on the rest of the region, Korean exports, Thailand's tourism, everywhere. I think that's where the big demand push is going to come from.
And today, lots of demand for oil stocks. We've got ExxonMobil up 1.4%. The ADRs of BP up 2.3%. Chevron up now by 2.2%. EOG Resources up 3%. Pioneer Natural up 2.4%. Briefly, shares of app companies are rising now as Apple prepares to allow alternative app stores on its iPhones and iPads. Apple shares up 0.5%. Match up by 8.2%. Bumble up now by 2.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by the Jewish Communal Fund. For 50 years, JCF's donor-advised funds have been helping families create charitable legacies. Start now and open a JCF fund before year-end. Visit jcfny.org.
All right, Tim, well, this next story, it's among our most read on the Bloomberg. It's also in the upcoming new issue of Bloomberg Business Week out later this week. The story already online and on the Bloomberg. It's about how just over 2 years ago, Amex faced an existential crisis, losing customers, facing a pandemic that hurt it really more than others because of its focus on traveling and dining out. And then Amex figured it out.
Yeah, our colleague Jenny Serrain wrote that it, quote, may be the marketing coup of the century. Here to tell us about that story, we got Sally Bakewell. She's Bloomberg News finance team leader, along with the editor of Bloomberg Business Week, Joel Weber, both right here in the Bloomberg Interactive Brokers studio. So, Joel, what happened during the pandemic to Amex?
It wasn't looking so great for a second, and that is sort of what got me initially interested in the story, was because it was like, oh, is there an existential moment here that Amex, might not come out of the pandemic looking as good as it went in. People were suddenly not in the early days of the pandemic weren't spending quite as much. They ended up doubling down and spending a lot more, and have continued to spend. And the economy keeps chugging because of it. And that actually is part of what became this Amex story, because consumers haven't stopped spending. And if anything, Amex was like, you know what? We have this really good thing going. Let's double down and make it even more interesting. And that's basically what they did. They have an amazing loyalty program. They made it a little bit more expensive, and people just kept doing it. And what's incredible to me is, like, there are very few business models that can look like this when other people come for it. JP Morgan, Sapphire Card, once a Business Week cover story. They did a really amazing job of creating a business out of nothing. And yet Amex's moat seems like it keeps getting deeper and wider. So Jenny and Thomas Buckley did a great job telling this story. Sally Bakewell leads the finance team. Sally, what stands out to you about how Amex has doubled down and yet found a new potential?
Yeah, I think the really surprising thing here is that instead of killing it, the pandemic actually gave it a glimpse into how irrelevant its brand could become if it didn't start spoiling cardholders who could no longer use a lot of the benefits that made it so famous. You know, its travel, its dining perks. So, you know, in that process, it revamped its platinum card. As you said, it upped the price, which was kind of a surprising thing too. It's now more expensive than the Chase Sapphire card at $695 a year. It added all these new benefits.
That's just to carry the sucker, basically. But go ahead.
Well, think of the Centurion card, which
Yeah,
is
that's true.
$5,000.
Okay.
And of course, we all have one of those.
It's above my pay grade.
But
I think that maybe I'm the only one who doesn't have one of those. You have to be invited to that.
Yeah, you
I've
do.
not been
Even
invited.
the CEO didn't initially get.
But Sally, I'm thinking about like Amex going after, like they certainly had the establishment, I feel like, but going after younger folks, whether it's Gen Z, X, Y, whatever, millennials, like that to me seems to be a big part of this strategy, and it worked.
It really did. It was a huge part of the strategy. Amex said that it signed up more platinum cardholders this year than ever, and Gen Z and millennial customers made up about 60% of all of that consumer cardholder growth. But of course, with that maybe brings an added challenge because this is an untested cohort of the population in an economic downturn. Now, Amex says they're not too worried about it because these people are keeping up with their bills, but they have already set aside hundreds of millions of dollars for potential soured loans. In fact, they did that in October and actually set aside more than analysts had expected. So they're very bullish, but at the same time, they're definitely shoring up for some kind of crisis.
Okay, so talk to us about the CEO, Steve Squeri, because for a long time, there was going to be a succession challenge at Amex, and boy, they found their guy.
Yeah, that's right. I mean, he kind of came to the job, and he jokes that he was someone who never was expected to be CEO. Whether that's absolutely the case, we don't know. But he.
Good story, though.
Yeah, indeed. Perhaps he just wasn't earmarked quite so clearly as the person who unfortunately passed away in a plane accident, and so it was Squeri who took over at that time. And I think he's credited with a lot of keeping Amex going through the pandemic. He sort of holed himself up. He says he took his daughters to lunch on a day in early March in the pandemic, saw how the city had emptied out. He sent all his employees home. He holed himself up and his key deputies up in his office, and they kind of figured out this plan, this strategy to revamp the card. And again, they might not quite have done it in the same way had the pandemic not had happened, and they might therefore not have been able to regain the sort of cool that they did. As you noted, they were kind of this credit card stalwart. They were sort of more known for capturing the middle-aged customer, and they've gone really hard after the Gen Z, and they've been pretty successful. And they have a signature scent. The card is dropped in, Jay-Z, Ariana Grande songs. They're hip. They're
hip. Cool. You can't. That's like real cred.
Yep.
Also, if you're the CEO, we talked about the Centurion card earlier. What is the Centurion card? And it turns out it doesn't
Joel,
come
if you
with
have
the
to
job.
ask, you can't afford it.
Well, I was like, wait, you have to pay for a credit card? How does this work?
Right. So $5,000 a year, you can only get it by being invited to get it. And that's the kind of big joke from Squeri is that he hadn't been asked to apply for the card when he took over. And, it's extremely selective, and he had to beg, he said.
Okay.
Noel Gallagher has one.
I love it. I mean, I think like he knows the right person to call to say, get me that card.
I also will just say that Warren Buffett has a little cameo in the story talking about, he has obviously an impressive portfolio of businesses. He could build any of them from scratch except for Amex, right? Like you can't build Amex from scratch. You think Warren has a Centurion car?
He could if he wanted to.
Yeah.
Yeah, I think so.
Isn't he like driving like his car from like 20 years ago?
He doesn't seem like
living in the same house.
Yeah, he doesn't seem like a Centurion kind of guy.
I think when you're Warren Buffett, other people swipe credit cards for you.
Okay? I don't know about that.
Maybe not at McDonald's.
Doesn't he own Apple now? Maybe Apple Pay? I don't know. All right, guys, we got to run. Our thanks to Sally Bakewell, finance team leader at Bloomberg News, editor of this story. Joe Weber, editor of Bloomberg Business Week. The new issue coming out later this week. It's already online. This is Bloomberg.
It's 2:53 on Wall Street. I'm Charlie Pellet with a look at some of today's company headlines. Moderna's experimental personalized cancer vaccine reduced the risk of relapse or death from melanoma when combined with Merck's Keytruda in a mid-stage trial. Stefan Bancel is the CEO of Moderna, and he spoke this morning with Bloomberg Radio.
Basically, what we have to do in 2023, based on this great data, and we know it's real because the p-value is very statistically significant, is we're going to start a phase 3 in melanoma in 2023. I guess it's going to take 12 to 18 months to enroll, and then we need to wait 12 months to get 12 months of survival data, and then file this to the regulators. So that's a couple of years away.
The stock is surging on the news. Moderna up now by 22.4%. Apple is preparing to allow alternative app stores on its iPhones and iPads, part of a sweeping overhaul aimed at complying with strict European Union requirements coming in 2024. Apple shares are up now by about 0.5%. Eli Lilly has issued a 2023 profit forecast that trailed Wall Street estimates, citing higher costs as the company develops and launches new treatments, including its Mounjaro weight loss therapy. Shares of Lilly, they are down by 1.7%. United has agreed to buy 100 Boeing 787 Dreamliners as part of a multi-billion-dollar order. And those are some of the company stories we're following at this hour. I'm Charlie Pelleton. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Massar live in the Bloomberg Interactive Brokers studio. Let's get an update on world and national news. For that, we turn to Nancy Lyons in our 99.1 newsroom. Hey, Nancy.
Thanks, Tim. President Biden says he is encouraged to see consumer prices are easing, down sharply from October.
My goal is simple: get price increases under control without choking off economic growth.
Asked today when he thought price growth would be back to normal, Biden said, quote, "I hope by the end of next year." Well, President Biden this afternoon is set to sign the Respect for Marriage Act into law. It does not force states to issue marriage licenses to same-sex couples, but will require people be considered married in any state as long as the marriage was valid in the state where it was performed. With Sam Bankman-Fried, founder of the crypto company FTX, in custody and unable to testify as scheduled, the House Financial Services Committee today did hear from the new chief executive, John Ray. Bloomberg's Irv Chapman with more.
Ray has presided over the bankruptcies of a dozen companies, and this one, he suggested, is particularly egregious.
I've just never seen an utter lack of record keeping. Absolutely no internal controls whatsoever. We had one person really controlling this, no independent board. That's highly unusual in a size company this is.
Ray described how Bankman-Fried made loans to himself and signed one promissory note as both lender and recipient. In Washington, Irv Chapman, Bloomberg Radio.
Elon Musk has been displaced as the world's richest person by part owner of LVMH, Bernard Arnault. According to the Bloomberg Billionaires Index, Musk's fortune has tumbled by more than $100 billion since January. The Ford F-150 Lightning pickup is the Motor Trend magazine 2023 Truck of the Year. It becomes the first all-electric truck to win that honor. In a World Cup semifinal game, Argentina leads Croatia 2-0 at the half. Argentina's captain Lionel Messi is playing in his 25th World Cup match, tying the record, but he has never won. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons in D.C. Hey, shortly we're going to head over to our TV colleagues, talk about the market trade, because it's been an interesting one, no doubt about it. We are off our lows when it comes to the equity trade. In the meantime, a couple of stories we kind of wanted to share with you has to do with, all things Elon, the story that keeps on giving. Check this out. Elon Musk, once worth as much as $340 billion, has been displaced as the world's richest person by Bernard Arnault.
It doesn't help that shares of Tesla have just cratered this year. Musk, 51, has seen his fortune tumble by more than $100 billion since January to $163.1 billion. That's according to the Bloomberg Billionaires Index. As of 11:50 this morning, it's less than the $170.6 billion net worth of Arnault, who's 73 years old. Remember, his wealth is largely from his 48% ownership of the fashion giant LVMH.
Yeah, well, and this is what happens when a lot of your wealth is tied into a particular stock or equity, right? So goes the market, so goes potentially your stock, and so goes your overall wealth.
Carol, I saw an interesting tweet yesterday.
What's that?
From Ross Gerber at Gerber Kawasaki, somebody we speak to quite a bit. He's very bullish
owns Tesla
on Tesla
shares, owns the cars.
His tweet expressed frustration about the wipeout in market cap that we've seen from Tesla. And he was asking about, hearing from IR about it, investor relations.
Wow, that's pretty aggressive on his point, because he's certainly been, when we talk about folks that have been a backer, a bullish of Tesla and Elon Musk in particular, this is certainly one individual who is certainly behind. Time will tell. Many would also say he's so entrenched, Elon Musk, with the fortunes of the company going forward, right? The mastermind behind it. So how do you balance what's going on with the share price versus the intelligence, I guess, if you will, and the innovation of Elon Musk?
Yeah, and what's
keeping
happening,
the company
but
going.
also the day-to-day of the company.
All right, we're catching up with our TV colleagues. We're talking about the markets. That's coming up in just a moment right here on Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now, we're about 60 minutes away from the end of the trading day. Romaine Bostic here alongside Scarlett Fu. We're joined right now by our colleagues Carol Massler and Tim Stenevik. We welcome our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. An interesting day here, Carol. I'm not sure where to start, but we'll start off, of course, with that CPI report. A big rally earlier this morning. It's kind of faded a little bit here as we get closer to the closing bell.
Yeah, you still have a core CPI of, 6%? That's pretty high by historical measures. And many would say, well, that means the Fed is going to continue raising rates and then continues that debate over whether or not they tip the U.S. economy into a recession and potentially a difficult one. In the meantime, so where do investors find opportunity? We've said it over and over again. They continue to pour money into those Chinese names, particularly those who trade in the United States. Again, the NASDAQ Golden Dragon China Index up another 1.5%. We've got a lot going on. You've got China bracing for a massive COVID outbreak as the economy continues to open over there. You've got expectations of more fiscal and monetary easing by China's Politburo. So again, that's the counterbalance or the balance to potentially the opening or the concerns about, economic downturns as more cases maybe, continue to overtake China. I mean, it's, I don't know, mixed news out of China, but nonetheless, enthusiasm. So Baidu's up 1.7%, Alibaba's up almost 2%, and then you've got Pinduoduo up another 3%. So investors at least turning, again, bullish on those Chinese names.
I want to go cross-asset here because we are seeing some of the steam taken out of the equity trade today, at least on a level of sort of the major indices. Can you explain this to me, Romaine? Why we're seeing Bitcoin today higher by more than 3% on a day when it's not just under scrutiny from regulators on Capitol Hill, but we see the Southern District of New York going after Sam Bankman-Fried, and we see SBF arrested yesterday. Why are we seeing a gain of more than 3% on Bitcoin today?
I mean, your guess is as good as mine. I mean, we should point out, though, that the rally that we're seeing in a lot of these assets actually seem to be partly on the back of, I guess, a little bit more risk on appetite coming off of that CPI print. But again, hard always to know what the correlations are. But you put it all together here. I thought it was interesting some of the technical levels coming into this morning. You had an S&P that actually did open above that 200-day moving average, but though it fell back below it here, it'll be interesting to see if it can reclaim it today on a closing basis. But right now, Scarlett, back above 4,000, so a nice round number for you, but not a lot of strength in some of the green that we're seeing on the screen right now.
Absolutely, especially when you consider that futures surged almost 4% when that print came out. And yesterday afternoon, Romaine, you and I, in the final hour of trading, we kept looking at how much stocks kept going up by the end of close. There were some people on Twitter speculating whether the number maybe was leaked. The White House, by the way, we have a headline here saying that the White House is not aware of any leaks for CPI data.
Yeah, and I won't comment on whether it was leaked, but one thing that was certain is there was some dramatic trading activity that occurred a couple minutes before that release actually became public. So read into that what you will. As far as some of the individual movers out there, I thought it was interesting too. I mean, the airlines are just really taking a hit today. JetBlue came out with a warning kind of saying that some of the activity that's been seen in the final weeks of this year are actually way below its expectations. Those shares down about 9% on the day. Some of the other airline stocks lower as well, including American Airlines and United. Meanwhile, keep an eye on Match Group, up about 8% here on the day. A lot of the other social media stocks higher as well. This apparently on the back of the news that Apple is going to shift its policy on app stores, basically allowing kind of the secondary app store. So basically a third-party app store can sort of be alongside the Apple App Store. That would allow some of these companies that wanted to do sort of in-app purchases without having to go through Apple and have them take a cut.
They won't have to pay commission anymore, right?
Right. So this is a big deal, at least for those companies. Keep an eye on that. Kind of confusing, but a lot of this stems from the EU, European Union officials who have gone after Apple on this. And then just real quickly, I do want to point out Tesla down about 4% here on the day, guys. At one point on the day, dropping below a $500 billion market cap. Remember, this started the year with a $1.2, $1.3 trillion market cap.
This is the sixth decline in 7 days, and Tim and I were trying to figure out what's going on with Tesla because I don't see any specific news.
I don't think anything's going on with Tesla. I think there's something going on with the person who runs Tesla.
Meaning he's not keeping his eye on Tesla?
I don't know. That's enough of our Elon Musk discussion here of the day. I do want to pivot to actually what's important and what's really moving, in all seriousness, and what really is moving the market, and that is the economic data. We take a look here at the big inflation print that we got today. And then, to Carol, to your point, the good news is CPI is trending lower. PPI has been trending lower. We're going to get an update on the monthly PCE next week. That has also been trending lower. And while you can certainly pick apart a lot of this and find, I guess, some negative things in here, overall, the trend line is down.
Yeah, exactly. But we're still paying a lot to live in our homes or rent our apartments. So that's still certainly some stresses on the overall economy and certainly on our pocketbooks. Having said that, President Biden taking maybe a little bit of a victory lap when it comes to at least that CPI print coming in a little bit more dovish than forecast and talking down the sentiment maybe. What? Okay,
go ahead.
I don't know. Maybe it's a victory lap. But listen, he certainly sees it as some optimism.
Was it actual lap? Did he like actually run around like the White House ellipse or something?
I believe he had a. I'm not.
That would have been.
That would have been breaking news.
I'll just.
You know what?
Just play
yeah.
the sound. Yeah. Okay.
Here's what President Biden had to say earlier today. Check it out.
Inflation is coming down in America. Prices are still too high. We have a lot more work to do, but things are getting better, headed in the right direction. I hope by the end of next year we're much closer. But I can't make that prediction. I'm convinced they're not going to go up.
All right, so it's a victory podium moment. All right, Joe Biden, the president earlier. But, you know, it is kind of interesting. Like I said, shelter costs continue to be a pressure. And we're still high from a historical basis. So you do wonder, it's still going to take some time. If you think the Fed's going to stop raising rates tomorrow or at the next meeting, it's probably unlikely, many would argue.
And perhaps that's why we're seeing some of the steam pulled out of this rally right now. Investors are coming to terms with the fact that, look, 7% is still really high. 6% still really high. The Fed has a lot of work to do. And we're going to probably hear that from Jay Powell again and again tomorrow. Is it going to be a repeat of what we heard in Jackson Hole?
Yeah, these are all good questions. And in the meantime, not a whole lot of people are doing any trading. The big action, of course, came right before the number was released, the 8:30 print was released. And of course, in the first half hour of trading when the S&P 500 made its high. But then since then, everyone turns their attention to the Fed. And we're not really going to get any news until 2 p.m. tomorrow. So we're in this big drift moment here.
And I would say probably not to 2:30 because I think the statement isn't probably going to give people, at least not give the markets what they want. I do wonder, though, what Jay Powell can really sort of say here. What, Carol? What do you have to say?
Well, I was going to say, you know, how often do we get kind of a feeling coming off of the Fed decision and the statement, and then Jay Powell goes into the press conference and takes, you know, questions from
every time
reporters, right? And then all of a sudden the markets see it differently. The other thing, you know, and I've been looking at our Markets Live blog, I keep thinking about what does it all mean for earnings? And there's a great headline in one story: stocks unlikely to escape in an earnings recession, and that is something that I think is key. What happens to earnings, and then ultimately what happens to valuations, or where they should be when it comes to the equity trade.
All right, I'm going to use a term that Mike McKee used earlier in our broadcast. Semi-soft landing is what we could see after today's data. That could still actually happen.
Who coined that? Mike McKee?
Mike McKee. He's down in D.C.
What is that?
Can you imagine if Jay Powell said that? That would, I mean, markets would go bananas.
As long as he doesn't use transitory, he's learned that lesson before.
Mike did use that word twice on our broadcast earlier. Sorry.
I think we have to go, guys.
S squared. All right, guys, we'll be back in less than an hour's time. Our cross-platform coverage will continue on radio, TV, YouTube, and on Bloomberg Quick Take. Beyond the Bell, we're going to count you down to the close on this Tuesday at 4 p.m. Wall Street time. A little bit about what I think, safe to say, anybody would say is a very key metric when it comes to the U.S. economy. And there was a great Bloomberg opinion column out today noting that mortgage rates retreating from their highest since 2002, U.S. housing market cooling. Some buyers are expecting to get a deal next year instead of having to contend with sky-high home prices. Unfortunately, as our Alexis Leondis writes, unfortunately, that's just wishful thinking. So
I couldn't bring I saw the headline. I couldn't bring myself to read it, Carol.
Yeah, have mortgage rates peaked? So we've got a great voice to get into it. The Vice Chairman and CEO of Rocket Mortgage is with us. He's Jay Farner. He's here in our Bloomberg Interactive Brokers studio. I'm kind of stumbling through because I wanted to get to you. How are you?
I'm great. Thanks for having me.
How is the U.S. economy? How are the mortgage industry? Because I have a relative that works in the mortgage industry, and she was crazy during the pandemic. She's pretty quiet now.
Yeah.
How do you see it?
Well, I mean, we were at $4.5 trillion probably on a run rate for a good 18 months there. a yearly run rate, and now we're looking at $1.5 trillion. So certainly there's a lot of capacity in the mortgage industry. It's coming out rapidly. But it's interesting to watch what's happening today because we're getting a little relief in interest rates. As you know, what happens with the Fed doesn't necessarily translate to the 10-year Treasury, but we're seeing those rates come down, and so we're off of the highs. We're in the low to mid sixes at this point in time on a 30-year.
Is the coming down from some of the peaks we've seen recently in U.S. mortgage rates, Jay, is it causing people to come in and say, okay, there's a little bit of relief, now I'm going to do a deal, or not quite yet?
Yeah, not yet. Okay, I think what we're watching is a consumer adjust. We have our Rocket Money platform, so we have millions of consumers in managing their finances, looking at a credit card, canceling subscriptions. It allows us to watch their spending habits. And the consumer is still adjusting to what they've been experiencing the last 5 or 6 months. And when you look at house prices, they're off 2 or 3, 4%, depending on where you're at, but they're not off a lot.
Right.
And we look at mortgage rates, they're down a little bit, but certainly higher than where they were. So people are still making those adjustments. I imagine as we get into February, March, April of 2023, a lot of that work will have been done, and I think we'll start seeing more people enter back into the market.
What about other types of mortgage products? Because I think for anyone who grew up during the great financial crisis and saw what happened to the housing industry is perhaps, does a double take when they hear about adjustable rate mortgages. And certainly they've changed since then as a result of legislation and regulations. But are you seeing consumers go toward products that are not necessarily 30-year fixed because they offer smaller monthly payments?
Yeah, so I lived through that experience as well. We were fortunate to navigate those times and learn a lot as we move through those. What we're watching today is something completely different. Still, the 30-year fixed rate mortgage is the by far popular choice. We have something great called the Inflation Buster. It's got a great catchy name, but it's a pretty traditional buy-down program. So for the first year, we'll buy down someone's interest rate slightly. It allows them to afford the new home. The first year you buy a home, you've got the added expenses. You're moving, you're doing some painting, you're doing those sorts of things. So it allows our clients at Rocket to get a slightly lower interest rate that first year, and then it normalizes to a 30-year fixed rate for the next 29 years. But based on short-term rates, you guys are very familiar with this, adjustable rate mortgages certainly haven't been a program that most clients are going to use.
What about an interest-only 10-year, for example?
Very few of those programs out there. Maybe a specialized offering from a partner that we work with, but
it's still just the plain old 30-year fixed for you guys.
That's correct.
Wow, I'm surprised to hear
that's
that.
exactly right. And if you look at credit quality at this point in time, probably still some of the best mortgage credit quality that we have had in since the Great Recession. So quality remains strong, and so I think people in mortgages are performing very well.
So Jay, the story about people's and their individuals and their household balance sheets, really they're still pretty flush or they're clean. You're seeing that.
Well, we're seeing two things. We're watching account balances at banks drop.
Okay.
Right. Again, our 5, 6, 7 million people in our Rocket Money app who are managing their budget.
So they're spending
balances
down.
are coming down, and debt is going up.
Okay.
And I think that's why you're going to see $500, $600 billion of refinance mortgage done this year. Why? Because people are pulling cash out to renovate their home, do their kitchen, but also pay off high interest rate credit card debt that they're starting to rack up balances on.
Do any of this make you a little bit nervous?
When I look at the consumer, when I watch people calling us right now, I would say the consumer is incredibly strong.
Okay.
And I think the housing market's strong. Yes, down 2 or 3%. We need it to come down a little bit, quite honestly, to make it more affordable, but nothing like what we witnessed 10, 12 years ago.
What do you guys do with your mortgages?
Well, we hold most of our servicing. Almost everything that we write is a agency loan, so Fannie Mae, Freddie Mac, or FHA. But we service the vast majority of our loans, and something that we're very focused on as the #1 rated servicer in the country from J.D. Power, making sure that you're taking care of your clients. And really what we've been building the last few years is a full ecosystem. So people come into Rocket today, they may get a mortgage, we may service their loan, but we'll help them with a plan for purchasing a new home, we'll help them through our Rocket Money app, we'll help them buy a new car. We're now helping people with solar financing as energy prices rise. So we've really expanded our platform to make sure that we can take care of clients across the board. And why that matters, I don't think we're going back to 2.99% on a 30-year fixed rate mortgage.
Oh, ever?
Well, I won't say ever because I didn't think we were going there in the first place, right? It's hard to know what the future holds. But we have to prepare for a more $1.5 to $2.5 trillion mortgage market. that means a cost to a
I
client.
mean, 0% or negative rates, like that was
They were talking about that.
But that was the unusual part, right?
Yeah,
Like
yes.
that wasn't, but we lived through it for so long that everybody thought, okay, this is the norm.
When
And we had lots of discussions saying, well, maybe this is our new normal. And
Yeah. 6% is still a great rate on a 30-year fixed rate mortgage if you look over time.
Yeah, especially compared to, the mid-1980s, early 1980s.
Correct,
So
yeah.
when do housing prices actually come down to reflect the way that mortgage rates have gone up?
So I think there's about 3.5 months worth of inventory out there right now. When you get to 5 or 6 months, I think you'll start seeing people drop prices a bit more. But I don't imagine that we're seeing more than a 5-7% drop. I don't think we're looking at a situation where you're going to have 10 or 15% drop in home prices.
recession next year?
Yeah, I think so.
Okay.
I heard you guys say, what'd you call it, a semi-soft landing?
Yeah,
or something
semi-soft landing. I saw you nodding out of the corner of
Yeah,
my eye.
I think that's right. I think, I saw your stat up there, 50 basis points is probably the next step. But we're also seeing the 10-year come down. As I mentioned before, we're seeing the consumer get settled again. And so the capacity will come out of the mortgage industry, and big players like Rocket, I think, will continue to win as we get into 23 and 24, and I think the housing market will stabilize.
Hey, we've seen a lot of layoffs within the industry. We saw Wells trim staff earlier this year when it came to mortgages. What have you guys had to do?
Yeah, we offered a voluntary program to our team members. If they wanted to look for a different role, they could raise their hand, and we would give them a pretty lucrative severance package and those sorts of things to take care of our team. But we're at a great place right now in terms of the size of our organization. More importantly, we've taken the capital that we've raised the last few years, and we've got thousands of engineers building incredible technology, because we've got to engage our clients across a variety of sources, not just mortgage, and we've got to produce the highest quality mortgage at the lowest cost. That'll bring value to the consumer.
I mean, Jay, you are looking to diversify, right? So that your exposure isn't just mortgages, correct?
That's right. And we are looking to broaden the top of the funnel.
Yeah.
When you're talking to somebody who's going to buy a home, it's not like they know they're going to buy a home tomorrow. And so working through Rocket Homes, working through our agents, the purchase plan we just rolled out, some of the programs that we've brought to the table, we might start talking to a client now 6 months or a year before they buy. How can we confidently spend that marketing dollar? Because of all this engagement technology I'm talking about,
right.
I know when I acquire the client a year from now, they're still going to pull through to a mortgage. That's different than you'll see, I think, in the industry. And so it gives us a superpower to spend money and grow market share.
You want
even
them on
in a
your
tougher
platform,
market,
and then you want to be able to do a bunch of things with them.
for a long period of time. That's exactly right.
Who is your typical home buyer right now? When you see, you've got tons of data points. Who is it? How old are they? Where are they coming from? Is it a first-time home buyer? What is it?
Yeah, we're everywhere as the largest lender in the country, but I'll tell you, first-time home buyers have been our largest purchase client for many years now when we launched Rocket, and that's all about transparency. That's bringing information to the client. First-time home buyers want to get on their phone, figure out if they qualify, find the home that they like, and get lined up with an agent.
Well, and they're
That's what we
younger, and
bring.
they're cool doing this all on their phone or what
They
have you.
demanded it. When we built Rocket is
Yeah.
because the market research said, until you can give me that experience, I'm not going to go through the pain of buying a home.
So that's still the case.
That's still, it's growing. It's growing.
Do you want a bigger piece of the second-time home buyer buying up, or
Yeah, I
how
think-
much do you want
Look,
that?
we want a bigger piece of everything.
Okay.
And that's exactly why we're investing in the platform the way we are, to bring an experience to everyone. First-time home buyer, second home buyer, third. We need to be there all the time.
All right, I'm not being a smart aleck, but 15 seconds. Do you want crypto to be part of this?
So people were asking me, Jay, when are you going to accept mortgage and crypto like a year ago, right? And we said, we're going to hold off on that. I think good decision.
All right, TBD. Jay Farner, thank you so much. Fun to have you in studio. Vice Chairman, Chief Executive Officer of Rocket Mortgage, Rocket Mortgage, joining us in our Bloomberg Interactive Brokers studio. This is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. CPI Tuesday, it has been a choppy session. The Dow giving up most of a 700-point surge. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. A big-time fade for the main U.S. averages after surging on the open as the economic data showed core inflation slowing. The Dow is now up 56 points, was up 707. S&P's gained 24, and NASDAQ is up by 94. The U.S. 10-year yield at 3.5%. Gold is higher by 29. Oil is climbing, and Bitcoin is also trading higher by 3.1%. Among the main 11 S&P sectors, leaders were energy and telecom. Consumer staples were under pressure, and leaders to the upside, the Dow, Chevron, and Merck, while Amgen and UNH led to the downside. After earnings, Oracle fell 1.8%, and in other news, Tesla's market value has fallen below $500 billion, and Ford to boost production of electric F-150 trucks. Wrapping things up, ABM Industries reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over via Bloomberg. Type Squawk, SQUAW, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovec live in our Bloomberg Interactive Brokers studio. We're out on YouTube and on Bloomberg Quick Take. And Bloomberg Technology co-host Ed Ludlow, he's back for another edition of Bloomberg Plugged In.
It's your weekly look at EVs brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information.
All right, Ed joins us from the Bloomberg 960 studio in San Francisco. Ed, good to have you back with us. Lots happening in EVs this week. Let's start off with Rivian. Yesterday, shelving plans to jointly build EV electric vans in Europe and with Mercedes-Benz. I mean, didn't they just sign this up, 3 months ago?
So the deal was signed in September, and they're walking away. And, you know, my understanding is that RJ Scaringe, Rivian's CEO, and his team, they looked at this and thought, you know what? We got enough on our plate right now. You know, they're trying to build these 2 consumer models at a plant in Normal, Illinois. They're trying to build a battery electric delivery van for Amazon here in the United States. And even though they want to get into Europe, they want to get outside of the US and have this global footprint, when they really looked at the numbers, didn't make sense for a company that's absolutely burning through cash.
Well, speaking of burning through cash, the company went public a little over a year ago. It has since burned through about a quarter of the cash that it debuted with. The idea was to take on Tesla. You know, we talk a lot about Tesla's woes. How's Rivian doing in taking on Tesla?
You know, it's doing well. It's funny. I'll give you guys a little bit of a behind-the-scenes moment. So it's the middle of the night, Sunday into Monday, and this news breaks in Europe hours. And we published the story that Rivian's walking away from Mercedes. And then one of my very smart editors, a guy you might know, Craig Trudell in London, goes, hold on a minute. I'm just looking at Rivian's financials. And it clicked in our mind that after Rivian IPO'd, at that moment in November of 2021, they had more cash on their balance sheet available to them than Tesla did at the time. And Tesla was already far and away the leader in EVs, right? The reason that everyone got so caught up with Rivian is because the thing that they were making, a battery electric pickup, a battery electric SUV, they're electric versions of the cars we drive today in North America. No one's driving little cars here. Bigger is better. And Tesla have always focused on those smaller cars. But the story since is that that big cash pile has just been blown through. You know, they're spending it as quickly as they can. And, you know, that they are kind of meeting the reality like Tesla did, that ramping up production's really hard and very expensive.
So what's top of mind here? Is it in terms of what they were laying out kind of publicly and how they were doing, or the cash burn itself?
I think it's a bit of both.
Okay.
You know, they started this year with hopes of building 50,000 EVs across the 3 products, the 2 consumer products and the van for Amazon. And then it got to March and they were like, you know what, it's not going to happen. 25,000 this year is the goal. For the first year, that's pretty good. Then in October, they laid off 6% of staff. And the reason at the time they said was, we need to be realistic in this environment because we can't raise more money. So they're trying to play catch up. But the problem is that playing that catch up is expensive. But they're still doing well. You know, if you look at the landscape compared to the likes of, say, a Lucid, or even comparing to the legacy names, GM and Ford, Rivian's really doing this. They are really building pickups and SUVs, battery electric ones that work. And so the question is, how long will it take them? The same story in 2018 with Tesla. How long does it take them to get to profit? How long does it take them to get to meaningful volume so that you see these things on the road all over the country?
Ed, you know, we talked about this on the simulcast with Scarlett and with Romaine, but Tesla falling under $500 billion valuation earlier today. What is it that's got Tesla investors so concerned? Romaine made the comment that it was what's happening not at Tesla, what's happening at Twitter and the way that Elon Musk is tweeting and the way that and what we're hearing from Elon Musk. But I pointed out to Carol that, you know, we saw a tweet from Ross Gerber at Gerber Kawasaki, somebody who for years has been bullish on Tesla. Yeah. And even he is saying, hey, where's investor relations when it comes to the market cap that's been wiped out?
He's not alone in saying that. I mean, many of the investors that I speak to, many of those kind of like Tesla fan retail investors who both own the vehicles and own the stock are saying it as well. They want some direction from IR, not necessarily because of what's happening at Twitter. You know, the news there is that, according to Bloomberg's report, Elon Musk will, you know, replace some of the debt in his package to finance the Twitter purchase with margin loans secured against Tesla. You know, that adds an element of risk, right? Because if he gets called on those loans, you know, that Tesla stock comes into play. There's also an element of key man risk. Where is Elon Musk paying attention right now? And that's a lot of what, you know, is the complaint from these voices. Then there's the China story. It's been a mixed message out of China. Bloomberg and others have reported that the Shanghai plant is kind of pulling back on production. And there's a question, well, is that relating to demand? Or is this just a normal annual upgrade or maintenance of the line? It's normal for Tesla to pause the line and make it better. But they also cut prices in China. And, you know, from time Elon has tweeted, you know, there have been local media reports in China saying this is true or not true or false. I think what everyone wants to know is what is actually happening at Tesla and how do we find out? And the answer is not forthcoming at this time.
Yeah, that's, you know, the issue, right? And you do wonder, does Elon, who's been so obviously identified with his own company, Tesla, does he, you know, need to put somebody as an operator there to help, as he's a pretty busy individual.
Like a Gwen Shotwell,
exactly.
like at SpaceX.
And look at
SpaceX. Well, we reported that Tom Zhu is moved from China. He was the head of the Shanghai plant to run Austin. There had been a rumor out there that he was the new CEO of Tesla. But what we found out in our reporting is actually no, he was just in Austin to oversee that plant and a broader team of engineers from China with him. But again, there was no engagement from Tesla on this issue. We didn't hear from them. But people want to know, you know, was Bloomberg right in its report that he's in Austin running operations, or was this local media outlet in China right that he's the new CEO? And there was no confirmation from Tesla or engagement either way. He does have a deep bench of talent. You know, Tesla's a big company, guys, with tens of thousands of people. There are people there in senior roles running the place day to day. But so much of its fate is tied to Elon Musk. They even disclosed that in regulatory filings, that future performance is dependent on Elon Musk's involvement. And so I think that's a question too, right? When it relates to Twitter or SpaceX, where is he spending most of his time? Is long-term Elon Musk committed to Tesla?
Yeah, I think a lot of people are asking that question. Hey, Ed, before we let you go, we heard you say that for a lot of Americans, bigger is better when it comes to vehicles.
Oh, yes.
I know from traveling with you, my friend, that you always rent a big truck when we go to the American West. Historically. What about these smaller vehicles? There's a great piece in City Lab that talks a little bit about autocycles, quadricycles, golf carts, LSVs.
Yes.
Are we going to see these tiny vehicles taking over our cities?
Mini cars.
So I shout out to David Zipper. He is a visiting fellow at Harvard. He's a contributor to Bloomberg City Lab. He knows micromobility, mobility, and he knows cities. And I just go and read it. But the logic is right now, two key data sets. Americans on average travel 6 miles in their vehicle. They don't need an EV that's huge and can travel 300 miles if that data is to be believed. The average American is also struggling financially with interest rates. The average price of a new vehicle in this country is about $46,000 right now. He makes the case that there is a whole offering of small, low-speed vehicles that can run off everyday electricity outlets, don't need special chargers, they're more affordable. Yes, they have shorter range, they're much smaller, they have limited speed limits. But if you think about the behaviors of Americans and how they commute and the distances they travel, this could be a really good solution. If you look at Europe and China, these are products that are much more mainstay. So read the article, look at those offerings that are out there, and ask yourself, actually, is a little tiny low-speed vehicle battery electric for me, or do I want to stick with my big pickup truck?
What about you, Ed? Getting to the office in San Francisco. You live in the city.
Well, I cycle into work as often as I can, and that's another part of the argument, that actually these things are enclosed, so they're safer potentially than a bike. But, you know, I think EV is somewhere I want to go. I would just make the umbrella point that just as like the smaller vehicles, cost is a consideration, but when it comes to everyday consumers, the availability of EVs is a problem. Remember this year, the story has been wait times to get your hands on a Tesla or one of these new models.
Well, and a whole series of these vehicles, these tiny vehicles, mini cars, can only go about 25 miles an hour. I mean, that's
faster
their
than me
top
on my
speed.
bike, Carol.
Yeah, but I mean, you know, kind of don't want to get stuck behind them as you're charging to the supermarket.
I rode my bike into work today.
All right. Ed Ludlow, thank you so much. Bloomberg Technology co-host Ed Ludlow. Catch him at 5 p.m. Wall Street time on Bloomberg Television.
Let's get to world and national news. Nancy Lyons is in our D.C. newsroom. Hey, Nance.
Thanks, Dan. President Biden signs the Respect for Marriage Act this afternoon. He's invited thousands to the White House to celebrate the new law protecting same-sex and interracial couples. One of the first openly gay black members of Congress, New York Democrat Mondaire Jones, tells Bloomberg, for him, the law doesn't go far enough because it does not ensure marriage equality in every state. The law only requires states to recognize same-sex unions across state lines. The list of alleged crimes is long for Sam Bankman-Fried, according to Damian Williams, the U.S. Attorney for the Southern District of New York. Williams says Bankman-Fried intentionally deceived investors in his cryptocurrency exchange FTX while enriching himself.
It's so hard to compare these things, but I think it's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history.
Williams says the FTX probe is ongoing. Today, lawmakers heard from the man who now heads FTX, John Ray. He alleges the crimes at the heart of the company's collapse amount to, quote, plain old embezzlement. The Federal Reserve now has some breathing room on interest rates. A key gauge of U.S. consumer prices posted the smallest monthly advance in more than a year, indicating the worst of inflation may have passed. President Biden was asked when he thinks prices will be back to normal.
I hope by the end of next year we're much closer, but I can't make that prediction. I'm convinced they're not going to go up.
Excluding food and energy, the consumer price index rose 0.2% in November. It was up 6% from a year earlier. In today's World Cup semifinal match, Argentina is leading Croatia 3-0, one of those goals scored by Lionel Messi. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all higher, holding on to gains in what has been a volatile session. Got to keep in mind that at one point this morning we had the Dow up more than 700 points. Right now the Dow is higher. Again, has been swinging between gains and losses, but it is higher now by 76 points, up by about 0.2%. S&P 500 index up 25, higher by 0.7. NASDAQ now up by 105, up by 1%. The 10-year yield 3.51%, with the 2-year yielding 4.23%. Spot gold up 1.6%, 18.10 the ounce. Right now, Bitcoin is up 3.3%, 17,751 on Bitcoin, and West Texas Intermediate crude is up 3.1%, 75.42 a barrel. Well, as for the overall market backdrop on this CPI Tuesday, Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments.
There are concerns, obviously, of a shallow recession. So you have to be tactical and have a balanced portfolio in order to take advantage of what's going on in the market at any particular time. We don't want to be too heavily weighted one way or the other.
UAL shares, that's the parent of United, down now by 7.1%. United has agreed to buy 100 Boeing 787 Dreamliners as part of a multi-billion-dollar order. Shares of Boeing up by 0.7%. JetBlue Airways says demand in the final weeks of the year shaping up to be worse than expected, weighing on the carrier's sales and raising new questions about the strength of the rebound in American air travel. Shares of JetBlue, they're down now by 8.3%. Recapping, stocks higher, S&P up 28, up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 18 minutes left in today's trading session. It is time for the drive to the close. And back with us is Axel Merck. He's President and Chief Investment Officer at the $1 billion investment advisory firm, Merck Investments.
Axel, good to have you back with us, joining us this afternoon from Menlo Park, California. How are you?
Great to be with you. Well, with that lovely introductory music, I must be doing great.
That's what we like to hear.
Well, listen, let's talk about the trade here. It's a funny one. You know, we kind of came out of the gate pretty strong, got a weaker than forecast CPI print. We're all speculating about what we get from the Fed tomorrow. How do you see the market fundamentals at this point? Because, Axel, that's what ultimately matters. I feel like the longer-term fundamentals rather than the day-to-day gyrations.
Yes, somewhat. You had an interesting soundbite coming into it that sounded so radical, diversification. And the reason I highlight that is the one thing that didn't work in this year was diversification. Quote unquote, everything went down, right? Mm-hmm. And I think as we are going through these morphing correlations, diversification may actually work again next year. Now, as far as that doesn't mean it's good for stocks necessarily, quite the opposite. Remember, we do have a Fed that has a very rough tool. And historically, at least, the markets bottom about halfway, two-thirds through recession. And I think the window for the official bureaucrats-driven recession is just about opening. And so and the Fed is all but coerced to continue tightening here. And so I'm not so sure it's going to be doing so great for stocks. But as we saw today, if you're short the dollar, it's been doing all right. Bonds, while they are off the highs for the day, they're rallying. So we are past the peak hawkishness. And at this stage, I think, yes, diversification might be one of the better plays. And we will be entering a reflationary environment, quite possibly, as the economy is weakening.
Well, you know, one thing I want to ask you, if stocks historically bottom out around halfway or 2/3 through a recession, if we get a short recession next year, it sounds like we're not too far away from maybe a good entry point when it comes to equities, no?
I think that's the big question. Is it going to be a shallow recession, as your previous guests have pointed out, or a deeper one? I am reluctant to think we're going to get away with a shallow one, if only because, remember, Fed policy acts with a lag. Powell suggests, oh, everything happens faster these days and prices everything in right away. Well, only because we get so much forward guidance. Remember the thing that was thrown out, but now we have, again, forward guidance because we kind of know exactly what the Fed is going to do. The Fed's activities work with a lag. We will continue to tighten. The Taylor rule would suggest easing right now, right, for much higher levels. But we will be tightening into a slowing economy. Yeah, we might be lucky to get a shallow recession, but I would not bet my house on that.
So the alternative to a shallow recession would be, you know, a deep recession. How are you envisioning these recessions?
Well, the key difference is that equities tend to do much worse until we kind of reach the middle of that deep recession. And the more interest rate sensitive aspects, as the Fed then will have to pivot, and we see that on a day like today, is something like gold. The gold miners, they tend to react early. Bonds tend to do well in that sort of environment. On the equity side, the small cap value area tends to do better in that sort of environment. And so, and that's when I mentioned to diversification, if I'm not going any endorsement here, but a small cap value strategy, if one wants to be in equities, or to the extent one has to be, having that a bit overweight, I don't think can hurt. Ultimately, the question is, of course, what will the Fed do? I do think the Fed has boxed itself into a corner, and don't underestimate whatever curveball the politicians will throw out. I've been somewhat in the stagflation camp, and the reason is that policymakers tend to make things worse with the quote-unquote best intentions as we move along this path here.
Hey, Axel, help me out, though. You say somewhat in the stagflation camp. I mean, you guys have an ETF, right, that is based on components that will benefit, you know, if
yes.
So, yeah, go ahead.
Yeah, so we launched a stagflation ETF last May, and we didn't launch it because we think we have a 2-month stagflation environment. We launched it because it's really the reaction of policymakers that it can extend that agony for years to come. Bernanke, in his book that he published not too long ago, he wrote, and I would fully agree, once you have high inflation, you don't just fizzle out. We had that once in the late 40s, but the reason why inflation tends to be longer and tends to be more persistent is because the reaction by policymakers tends to be the worst possible. I mean, we've talked about the giving checks to consumers and whatnot that doesn't increase supply. And so it's not linear, right? By all means, in the next several months, I would think the year-over-year comparisons, because of the seeding base effects, inflation numbers are going to come in better.
Yeah.
And so, yes, in my view, the Fed will pause in May, but this doesn't mean we're out of the woods. We don't have a Fed strategy other than quote-unquote higher for longer. That's not a strategy, right? Larry Summers said we need a new framework. We're still stuck in the framework of the backward-looking average inflation, something rather. Powell said he's not going to even look at that for another 3 years or so. I don't know how we get through this environment. We'll feel better in the next several months. I have little doubt about it. But we will have increased political pressure because of a weakening economy. And then one of these reports will be worse than expected, right? Today, we're all euphoric. Maybe the next one is going to be better than expected. But at some point in the coming months, a report will be worse than expected. The economy will be slowing down. And part of the reason we have the volatility, by the way, is because I don't think the Fed has a strategy. And so what the market does, it will jump to conclusions to the best it can. And so that's why today everything is great and tomorrow everything is horrible because we don't quite know what the reaction function is at the Fed.
Well, and to be fair, we've had quite a swing on the S&P 500, so the volatility is certainly there. Much more optimistic about the outlook earlier on if you just look at that simple, indicator, because we were up almost 3% on the S&P, and right now we're down. Actually, we're up about 0.8%, but we were almost flat at one point. Axel, thank you. Axel Merck, President and Chief Investment Officer at Merck Investments, joining us via Zoom William from Menlo Park, California. You are listening and watching Bloomberg Business Week right now on Bloomberg Radio.
It's 3:53 on Wall Street. Charlie Pellet with a look at some of today's company headlines. Moderna's experimental personalized cancer vaccine reduced the risk of relapse or death from melanoma when combined with Merck's Keytruda in a mid-stage trial. The two therapies cut the risk of death or recurrence of the lethal skin cancer by 44%. The drug makers plan to move the combination into final stage studies next year. Moderna shares are surging today on that news, up 20%. Moderna is based in Cambridge. Stéphane Bancel is the CEO of Moderna, and he spoke this morning with Bloomberg Radio.
But what we've shown this morning for the first time in the history of medicine is our ability to design a product for one human being at a time, where we code in our medicine the mutation of your specific cancer. And we've shown this morning, given the huge difference of recurrence and death versus Keytruda, the gold standard, we show that we can teach your T cells, which is part of the immune system, to recognize your cancer and then go eat it.
And again, the shares up now by 20%. Eli Lilly issued a 2023 profit forecast that trailed Wall Street estimates, citing higher costs. Eli Lilly shares are down now by just about 2%. Twitter has disbanded its Trust and Safety Council, a group of independent experts who provided guidance on content moderation issues days after several members quit. And Elon Musk, once worth $340 billion, has been displaced as the world's richest man. And those are a look at company stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, in just a few minutes, we're going to head over to our TV colleagues, our cross-platform coverage on the market trade, and it's an interesting one. A lot of volatility, once again, in the equity trade. But what's really interesting is what you're seeing along the yield curve, the Treasury yield curve, especially when it comes to the shorter end, that two-year note, 4.23. So we have really backed off. That 10-year at 3.5, kind of settling in there, I feel like, over the last week or so. But what's interesting is you've now got traders, pricing in a lower peak for the Fed's key policy rate. And we'll see what we get from Jay Powell and company in the FOMC tomorrow of whether or not that gets a confirmation in terms of the trade that we're seeing today, or whether or not they do something or say something differently that's traders say, wait, we've got it wrong. It's going to go even lower, or it's going to stay above that 5% rate.
Interesting to see the air come out of the rally a little bit today, Carol. But we're still up more than 0.7% on the S&P 500, above that 4,000 level, 4,020 right now. The NASDAQ up a full percentage point, 11,253.
Yeah, all right. So we're going to talk more about the Treasury trade, the equity trade in just a moment. In the meantime, a couple of stories we just want to quickly hit on. We are all over crypto again, really on our radar, I should say, because you've got Binance Holdings coming out. They are the dominant cryptocurrency exchange. They've been hit by large outflows, traders moving to take custody of their tokens, and this is all amid revelations that rival FTX may have misused customer funds before its November implosion, courtesy of John Ray up on Capitol Hill, now the CEO of FTX, and trying to figure out what went wrong.
Yeah, net outflows of digital tokens from Binance amounted to about $3.7 billion in the past week, including almost $2 billion in the last 24 hours. This according to data from the research firm Nansen as of 9:20 a.m. in London. Hey, we're going to be speaking a little bit later with Max Chafkin about a piece that he has out for Business Week that's all about the rivalry between Sam Bankman-Fried and Changpeng Zhao, also known as CZ, when it comes to Binance.
Right, the founder of Binance. And then in the meantime, another side to this FTX fallout and crypto collapse, Tom Brady turning to Latham and Watkins to fight lawsuits tied to his promotion of FTX, with litigants claiming he's liable for helping to funnel investors to an alleged Ponzi scheme. This is, again, we're seeing some of the claims made against Sam Bankman-Fried when it comes to money, lobbying, and influence.
The story continues.
That's for sure. All right, we're checking in with our TV colleagues. We're talking markets.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenovic. We welcome our audiences across Bloomberg Radio, television, Quick Take, as well as on YouTube to parse the most crucial moments of the day. A market trying to hold on to its gains here. And I'm just going to give you a quick update because I know you're a huge sports fan, Carol.
I love
Argentina
sports.
Advancing.
Yeah,
3-0 over Croatia.
Yeah, I love sports. Why do you think I don't love sports? I've got 4 brothers.
I don't know. I just
grew up playing
stereotype you all the
sports.
time. I don't know. I probably got you all wrong.
Scarlett knows what you're talking about. She has the business of sports.
I've been keeping an eye.
Well, I know Scarlett knows sports. Scarlett's like a hockey player.
Scarlett knows sports. You should be.
You should be.
Check me or something.
Watch your back there, buddy. No.
Is that what they're doing, hockey check? What is it?
I throw a mean hip check.
You know why we're having this talk? Because you know what? All bets off
About
until
soccer?
we hear. No, but we're all kind of waiting for that Fed meeting tomorrow. Having said that, we love to talk the equity trade, volatility in the equity trade, but but man, it's really about the Treasury trade today. As we saw, Treasury surging, expectations, rates coming down along the yield curve, and then the expectations about what we get from the Fed tomorrow and how high they need to go in terms of that peak Fed policy rate. Expectations by traders coming down, so we'll see whether or not, Tim, we get confirmation from the Fed tomorrow, or whether the Fed says something that kind of messes it all up again.
I'm kind of going with the latter there, Carol. I'm not a betting man, but I don't know if you're Jay Powell and you want to see, financial conditions necessarily ease to a certain extent. I am surprised to see this rally, though, Scar, come under pressure today, given the fact that we were higher by, more than 2.7% earlier in the session, and futures were even higher than that after that CPI print came out.
Yeah, of course, you have to wonder now that people are starting to let the idea sink in that we're going to be higher for longer, things are going to stay restrictive for some time, what that means for earnings estimates. We really haven't seen analysts trim down their earnings estimates. That's going to start happening once companies pre-announce.
It looked like there was going to be a little euphoria here in the market today. When we got the opening bells, the S&P 500 actually opening above some of its key resistance points and right at that 200-day moving average. Today, right now, it's going to close just a smidge below that 200-day. It's higher on the day by about 29 points or 0.7%. The Dow up by about 0.3. The NASDAQ Composite higher by about 1% on the day. And Carol, the Russell 2000 moving higher by about 0.8 to close out the day.
All right, and definitely well off our best levels of the day when it comes to those equity averages. But what's interesting is if you take a peek into the S&P 500, most names in the index actually posted some gains, 357 to be exact, 146 lower, Scarlett. So there was a bit of a more risk-on trade today despite finishing off our highs.
Yeah, it was more of a broader advance that was a broader decline, in line with the S&P 500 closing up shy of 1%, up 0.75%. In terms of gainers, you have media, entertainment, the likes of Netflix, for instance, leading the way. REITs have been positive for most of the day, and energy, the best performers of the year, holding on to a 1.9% advance. On the downside, autos continue to be a drag, particularly Tesla, which has lost ground for the 6th time in 7 days, Carol.
Yeah, it's pretty tremendous what has happened with that name, and you do wonder. We were having conversations on air earlier about when investors, they've already been upset about what's happened with the share price and what happens in terms of going forward for that company. Elon's been a bit busy, as we all know. All right, so let's get to some of the individual gainers. Moderna certainly standing out, top in the NASDAQ 100, top in the S&P 500, up just shy of 20% by the close today. We know what happened. Mid-stage clinical study of its experimental personalized cancer vaccine for skin cancer melanoma in combination with a drug over at Merck. It reduced the risk of relapse or death from melanoma. I know the CEO was on our air talking earlier. I mean, this stock just really popping in a big way and just driving some optimism that it's just not about the COVID vaccine, right? That there's more in the pipeline.
Yeah, and that's a big deal. I mean, because when we talk about the mRNA and just how instrumental that was to developing the COVID vaccines, everyone, Carol, said, what else can we use this for? And this is at least a glimmer of hope that maybe there is a broader use for this.
Yeah, absolutely. Yeah. All right, so as I said, top there. Meta, I just find it interesting. It's up another 4.7%, continuing its bounce back. It's up roughly 37% in the past 5 trading days. Much of it, no, I'm sorry, Meta. I'm sorry, I meant to talk about DocuSign.
Meta. Well, you were talking about Meta.
Let's talk about Meta. It's up 4.7%. It was top in the NASDAQ 100 earlier. It's up about 30% since November 3rd, still down more than 60% so far. The only news of import, perhaps, Meta's Instagram testing a new feature called Candid Stories. It's also rolling out a notes feature on Instagram. So maybe just trying to go after some of those more popular apps to maybe
a notes feature. That's what, like 140 characters where you
short things, using emojis.
Maybe they'll double it to 280 in a few years.
Interesting.
And go to 4,000 after Elon Musk buys it.
Just pick up a book, read a book, everybody. Take a walk in nature. That's what I'm going to say. DocuSign, that's the one continuing its bounce back. It is up more than 37% in the past 5 days, much of it coming after that latest quarterly beat and upbeat forecast. Yesterday, Citi raising its price target to 72 from 59, up more than 7% in today's session, and it is still down more than 62% year to date. But nonetheless, investors have been moving into it as of late. All right, Tim, over to you.
All right, let's get to the biggest decliners. In the S&P 500 on a points basis today, it goes once again to Tesla, shares falling more than 4%. Scarlett, you mentioned down 6 of the last 7 days. That held true at the close. The company closed closed just above $500 billion in market cap, though it did dip below it a little earlier in this session. At last check, $508 billion is the market cap now. Still, though, hit a 52-week low today, actually closing at its lowest level since November of 2020. We are starting to hear from more and more investors who are upset with the decline that we've seen in Tesla. Most notably, I think today is Ross Gerber over at Gerber Kawasaki tweeting at the board of directors saying that the company needs an interim CEO, and the board of directors needs to, quote, wake up, according to Ross Gerber.
Board. Have you looked at the board?
I have. There's some other folks with the last name Musk on the board as well.
Just, you know.
Yeah, that's a good point. You make a good point, Romain.
There's no point. Just stating the facts.
Okay. Let's talk airlines. United Airlines finishing the down by close to 7%. We actually saw a host of airlines move lower today. We saw American falling after it said that Derek Kerr, the company's CFO, is going to step aside. We saw JetBlue falling after it said that demand in the final weeks of the year is looking worse than expected. United, though, falling after that huge order for 100 787 Dreamliners from Boeing. This is a multi-billion-dollar deal. Sheila Kayalu over at Jefferies, we've spoken to her in the past. She said that although the order was needed, elevated leverage is a substantial headwind for the company going forward.
All right.
And then Coinbase finishing it down by a little more than 9%. Got to look at crypto-related stocks today after hearing from John J. Ray III testifying in front of the House.
All right. We also got to look at what happened, of course, in the debt markets. I think Carol alluded to it at one point on the day, a 24 basis point drop on the 2-year as well as on the 5-year. Some of those been
That's a big deal, right? The shorter end moving in.
It is a huge deal here. And now, I mean, on the official close here, basically down 14 basis points on the 2 and about 10 on the 10-year yield. And what I thought, two things I thought were interesting about this, Carol, too, was just how severe the move was. And a lot of people now sort of questioning whether the big bond market slump, whether that's over, whether all this buying is going to continue. But just to get to Scarlett, who I learned today is like a tinfoil hat conspiracy theorist, there was a lot of activity.
Not true.
There was a ton of activity right before 8:30, and you saw it in the bond market here, and a lot of people are wondering why.
The White House, again, I'm going to go back to what they said. They said they're not aware of any leaks of the CPI data. Okay. So let's just make that clear. It needs to be aluminum.
Okay. I don't have aluminum. They don't let me bring aluminum on set.
It happens, but it doesn't happen often, right? And data needs to be protected before it gets out into the market.
Okay, well, let's think about what happens tomorrow and the way that Fed Chair Jay Powell takes in data like this. The inflation is certainly moving in the right direction, but as we've been talking about throughout the program today, Scarlett, 6% or 7% when it comes to headline CPI, that is still too high, and that's still quite above the Fed's target, even though the Fed uses a different metric.
Yeah, it's higher than it was last December when everyone was bemoaning how horrible inflation was. You know, we were joking about how after tomorrow's Fed decision, there's nothing else left this week for people to focus on. Not true. Retail sales is coming out on Thursday. That matters because we want to know how the consumer is doing, how the consumer is holding up, and I suppose look ahead to how the consumer might spend over the holiday season as all the procrastinators come out and start spending for holiday shopping.
You talking to me?
Yes.
Okay.
Looking at you, Tim.
I was just wondering.
No, you two haven't done your shopping yet?
I did some today.
Today? You're working today, right?
Yeah. I mean, it's
multitasking
is important.
I guess Carol, we know who's really holding the load up there.
It wasn't during the show. Okay, it wasn't during the show.
Okay. All right. What'd you get us?
He says.
I'm not telling.
Oh, all right.
Hey, we talked with the CEO of Rocket Mortgage, the housing market.
Are they still doing mortgages?
They are, but it's a lot slower, obviously, than it was. And what was it, the super soft recession that Michael McKee used?
Yeah,
in terms
semi-soft landing.
Semi-soft.
He was agreeing with us. He was
with
in the studio nodding his head, and he said that's a pretty good way to describe it.
Yeah.
That sounds like it's going to be a really, really long landing. Semi-soft? I mean, that could take months.
It's like a semi-soft ice cream and it just melts and it's just like...
A year?
I think the theme that we've been hearing, though, throughout the different guests that we've had over the past few days on our program is the idea of a really mild recession. And when we talk mild recession, we talk about a couple 100,000 jobs being lost. And that's something that pretty much everyone has agreed to is what we could see in 23.
Well, one silver lining, though, too, and we did talk to somebody who talked about this idea. You could actually have a recession without actually massive job losses. That the idea is that...
We've talked about it.
You just get right. But the idea is that you get this sort of just pause in hiring rather than actual sort of mass layoffs.
The only thing I would say, it's not an exact science when it comes to monetary policy and the Fed getting it right. Like, how many
Is it
stories,
science
right?
At all?
It's just a blunt
I feel like it's like Jackson Pollock over there at the Eccles building. Who knows what they're doing.
We're doomed. I do love Jackson Pollock, though. All right, we got to run, guys. That's a wrap.
What were his thoughts on monetary policy? The Taylor rule. That's what I want to know.
You done?
No.
All right. We got to go, guys. Our cross-platform coverage, radio, TV, YouTube, and on Bloomberg Quick Take. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
Clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you.
All right, it does feel like a lot of people are stuck in the middle, trying to figure out, first of all, does the Fed get it right? What does it mean for consumers? Engineering that soft landing, super soft, what was it that Michael McKee?
Semi-soft.
Semi-soft, I can't remember it, like a semi-truck.
Yeah, exactly. And I think the imagery there, right, is something that is, not quite a hard landing, but not quite, the miracle on the Hudson.
Well, I got to say, Bloomberg's Matt Boesler writing today that tomorrow's FOMC meeting, at that meeting, Fed officials are set to increase their 2023 unemployment projections for a third straight time amid warnings that their inflation-fighting campaign increasingly risks tipping the U.S. economy into recession. So how might that change the mood of the country and investors? We've got a great guest to tackle that one.
Glenn Williams is the CEO of the publicly traded insurance and financial firm Primerica. It has about $5.1 billion market cap. It's down, though, about 8% year to date. Glenn joins us via Zoom from Atlanta. Glenn, how are you?
Doing great today. How are you?
We're doing well. Carol, I think I want to start a little bit with what's going on with FTX.
I think it's smart. Let's do that.
All right.
So let's get into it. Glenn, we have a lot we want to talk to you about, and you do have a great view of what's going on in the economy. But someone who's been in the financial industry for a long time, for decades. What do you make of the collapse and downfall of FTX, and what role do you think crypto blockchain will still have in the financial world going forward?
Well, it's a mess, that's for sure. The impact it's going to have, I think, is yet to be determined, and hopefully the world we live in and of middle-income families hopefully have stayed away from a lot of that up to this point, and will learn a great lesson from it. So, I've got some personal opinions about it that I don't know how valuable those are.
Well, I'd love to hear those. I would love to hear those, because you are in a position right now, you're the CEO of a publicly held insurance and financial firm, so you know a thing or two about finance, I think it's fair to say. Is there any future here? What do you think personally?
Well, I mean, I have had a hard time getting my brain wrapped around the complexity of the cryptocurrency concept and what the inherent value may be of it. And so it's been one, I've got kind of the Warren Buffett philosophy that if I don't understand it, I don't invest in it. I certainly don't recommend it, particularly to middle-income families. And so that's something that we as a company and our recommendation have stayed miles away from. And I think that's been good advice for most middle-income families up to this point based on the track record. So I think it's going to continue to be bumpy. It may turn into, something over time, but there's a lot more before it proves itself, in my opinion.
Hey, Glenn, one more before we move on. What about, though, for your world specifically, when I think about insurance or annuities, might blockchain in particular be useful?
Well, certainly the technology itself, I think, has some real uses. I just don't think it's been applied appropriately yet in a lot of cases. And so I do think that as we move forward and understand all the places that blockchain can help with its transparency and its accuracy, there are clearly some applications there that I think we'll find. I'm just not sure we found them yet.
All right, so let's go into your latest Financial Security Monitor report. Remind us what you guys are looking at, who you survey, and what are some of the top findings?
Well, as I've said, our company focuses on the middle market, perhaps unlike any other to our scale. And so we've started doing the Financial Security Monitor back in 2020. During the pandemic, we really wanted to try to have a finger on the pulse of what middle-income families were dealing with financially as the world was upside down in so many other ways. And what we found out is that's been helpful to us in understanding their needs and their priorities, being able to make good recommendations that make sense to those families, because we have an understanding not just of the facts, which are important, but also how they're feeling, what they're prioritizing in their life. And as we've come out of the pandemic and kind of entered this rough economic waters around the potential recession and high cost of living, once again, we found those facts to be very valuable in helping prepare us to really connect with these families.
Hey, Glenn, how do you define middle income, and are you using that as a synonym for middle class?
We define it as between $30,000 and $100,000 of household income annually. We actually do business with a few families that are less than that and quite a few families above that. but that's generally how we've defined it over time. I know it's defined differently according to who you're asking, but we're looking at the budgets of these families and trying to help them get a strong financial footing. And so we find that we're best in that range. And that's also a market that has been overlooked or even abandoned by some financial advisors as they moved up scale, trying to find more efficiencies in larger transactions and wealthier families. To a great extent, those middle-income families don't have access to the advice and guidance they often need.
Right, and so important to the economy. I do wonder, Glenn, based on your findings, do you guys feel like the middle-income world, middle-income individuals are ready for any kind of recession in 2023, or will it be problematic?
Well, I think it's going to be a challenge as we look at the survey results each quarter, and not only look at the quarter's results, but the trending of directions and the attitudes. We find that, many families are struggling, and some have shifted into survival mode. So I do think there is a high level of financial stress on middle-income families right now. They always live in a world of tight budgets and making hard priority decisions, but it's particularly difficult now as the very basics, the essentials, have gone up so much in price over the last several quarters. And I mean, it's the gas and groceries, it's rent and mortgage payments being driven by the interest rate increases that are making it very difficult for middle-income families to meet all of their needs.
How would you describe this financial state that they're in aggregate? Like if we were to enter a recession, how precarious is this?
And you did use the word survival, which really caught my attention.
Yeah, and again, I believe there's a spectrum even within the middle income market. Some have prepared better. Some have come out of the pandemic with more cash on hand. Some have better, more stable incomes from their employment and so forth, all of which fluctuates and changes, for families all the time. And so I think you've got a spectrum of need throughout the middle income marketplace. But it's clearly more difficult, as we see in our survey attitudes, which are always amazingly optimistic to us. Our middle income families in North America, just their resilience is striking. But at the same time, we've seen those attitudes start to lessen in optimism. We've seen them start to do things. And the reason I use survival mode is we see things like credit card use going up. We see people stopping or postponing savings. Clearly, non-essential purchases have been ruled out in many households because it's just not possible right now. And so it's really according to how prepared they were. And I think the other thing is how long this lasts. We've been going through this financial stress now for a number of quarters. Based on the conversations I was listening to before I came on, there's a good possibility it's going to last several more quarters. And I think it gets more dire as we move forward, as it's extended.
Financial literacy has been a conversation that I feel like I've had since the beginning of my career, and I've been doing this for some time. If you could change one thing in terms of helping the group of people that you're talking about, the middle class, in terms of becoming more financially literate, what would it be?
Well, financial literacy is difficult because it's based on the assumption that information is missing or information is not available. And our experience is actually there's a lot of information. In fact, there may be too much information. It's slicing through the information to get to the part of it that's personally applicable to the family that's in need or the family that's looking for answers. And so what we find out is people are overwhelmed with information, and what they want is a question, two things, is how do I personalize it for my circumstances? And then is there some way to help me be motivated to continue taking action? Because there's so many pressures on middle income budgets that they put together a plan for this month, and then next month something happens and they get off track almost immediately. And it takes a certain amount of discipline and accountability. And so I don't know that it's one piece of missing information. Clearly, the more you know, the better you are. A lot of times it's the understanding that comes with my personal situation that people are missing. That's the missing link that I think people want to know is confidence in what I should do in my circumstances.
Glenn, great catching up with you. Glenn Williams, he's the Chief Executive Officer of Primerica, joining us via Zoom from Atlanta. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ all higher in a volatile session. Got to keep in mind that the best level of the day, the Dow was up more than 700 points. It ended with a gain of 100 points, up by 0.3%. S&P was up 29 today, up 0.7%, while the NASDAQ Composite Index advanced 113 points, up by 1%. Investors are mulling whether the latest CPI data showing prices rose less than forecast last month will prompt the Federal Reserve to alter its aggressive approach to battling inflation. 10-year yield 3.50%, with the 2-year 4.22%. Spot gold up $28 the ounce to $18.10, up 1.6%. West Texas Intermediate crude oil up 3%, $75.38 a barrel. Again, recapping, stocks rally, CPI Tuesday. We've got Fed Wednesday tomorrow. S&P up 29, up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Anshin Accountants and Advisors, the right fit tax and accounting firm that you need to succeed. Visit us at anshin.com/VIP to learn more. That's anshin.com/VIP.
All right, so as we were talking earlier, tomorrow is the second anniversary of the COVID vaccine, meaning if you can remember when, that was the day 2 years ago that the first person in the U.S. to get that very, very first vaccine, COVID vaccine, was someone right here in New York State, just outside New York City. And that person, Dr. Sandra Lindsay, Vice President of Public Health Advocacy at Northwell Health, she joins us right now on the phone from New Hyde Park.
It's good to have you back with us, Dr. Lindsay. How are you?
I am doing fantastic. Thank you very much for having me on.
You know, as I was preparing for this, I was thinking back to what things were like 2 years ago, and it's pretty remarkable because even though we are still dealing with COVID, we're certainly dealing with it in a different way, and we definitely have the tools to go out and face the world in a safer way. I'm talking about vaccines here. At the same time, though, we're seeing an uptick in cases. We're seeing mask use inside coming back. How are you feeling about things right now?
I'm feeling very hopeful, as I did on that day 2 years ago when I got vaccinated. We have made tremendous progress. We're able to, enjoy the things we love. We're able to hug again and gather again. And I still feel very hopeful, despite the uptick in cases, not to the extent that it was 2 years ago or a year ago. We're seeing flu and RSV on the rise, but we have flu vaccines, and we now have a myriad of COVID vaccines. We have boosters. We just need people to understand that COVID is not finished with us yet, and so we still need to act responsibly and to get ourselves protected.
And for those who are watching on YouTube and on Bloomberg Quick Take, we were just showing the footage, and I remember seeing it on all of the news stations when you got that shot. I mean, it was a big deal, and I think, started a flow of prominent people, whether it was celebrities, politicians, the president, or actually, I don't think at the time it was President Trump.
No, it was President Biden at the time.
President Biden, right?
Yeah. Well,
no.
2 years ago,
it was President Biden.
Oh, it was President Biden. Okay, see, I'm in like a time warp. But you really set a tone. Tell us, though, what was going through your mind when you were getting that shot.
At that time, having gone through the pandemic and dealing with this day-to-day just kind of hardship, grief, and suffering, I was just ready to get vaccinated. I felt like I was walking around with the world on my shoulders, and this was a ray of hope. And I just could not wait to get vaccinated. Mind you, I didn't go into this blindly, right? As soon as I heard that vaccines were being developed, I started reading up on everything that I could get my hand on that was published, that was credible. I spoke to my physicians. I spoke to people that I trusted before I got to that point. So when I got in the room, I was at ease. I was ready.
Because you look pretty serious.
Even though there were all the cameras around you and lights and
I was not paying attention to all of that. And at that point, I didn't know I was going to be the first one. I just wanted to get vaccinated. I just wanted to instill public confidence that look, we've gone through a difficult time, a dark time, and now is our time to get out of this and to fight back. And I just want to make mention of a study that was published today that was done by researchers from the Commonwealth Fund as well as Yale School of Public Health that found that of the 655 million doses of vaccine administered to Americans in the past 2 years, that has stopped 18 million additional hospitalizations and 3 million additional deaths, saving the country approximately $1 trillion.
It's pretty remarkable.
That's remarkable.
Yeah, it's absolutely remarkable. I should say, Carol and I did, go in the Wayback Machine, take out our calculators, and did the math, and we came to the conclusion that if we go 2 years ago, back to 2 years ago today, we would still have President Trump in office, but President-elect Biden was the one who, publicly got a shot during that time. So. It's hard to remember, Carol.
It's been a time warp.
It's been a time warp.
When we were thinking about it, it was 2 years ago, that first vaccine. It's hard to imagine. I mean, I'm 5 shots in. Tim's at 5 shots in. We were just, trying to make sense of it.
No, I'm 4 shots.
Oh, you're 4. Sorry, I'm 5 shots in. But Dr. Lindsay, this is the world we are in. When you got the shot, I'm assuming there were people in your world, in your orbit, personally, professionally, who were still maybe are going into it uncomfortable. Getting the shot, did it change their mind?
Oh, absolutely. And so many people have reached out to me. Yeah. Just this past weekend, I was doing my Christmas shopping, and this lady came up to me, and she just started saying, thank you, thank you, thank you. The entire store kind of turned around and looked at her like, what is she talking about? She's like, thank you for, just instilling the confidence in me and giving me the courage to go on and get vaccinated. I've had people come up to me and say, I had made up my mind that I was never, ever going to get vaccinated. And just seeing you there calmly taking the vaccine and realizing that despite what social media was putting out, that 24 hours later I was in an ICU, that you're still here with us. You're still using your platform to advocate and to encourage people to do their own research. Ask the questions that you want answered. Speak to the trusted people in your life, but do something.
It's good to hear, Dr. Lindsay, that you've had a positive experience over the last couple of years when it comes to people who've approached you. But I'm also wondering, in the first few hours, the first few days, what you experienced online, and because we have heard so much about the way that people have been attacked online for their views and just for stuff they've done. What did you experience?
Yeah, so, after the first couple hours after getting the vaccine, perhaps minutes, there were people online that were saying that I was stupid. Did I not hear about the Tuskegee study, that I was being used as a guinea pig? I'm just another example. I'm being paid for this. I'm a paid spokesperson for this, none of which is true. But, I don't get into fights online. Instead, I just turn that around into, the positive. Yes, I'm well educated. I know about the Tuskegee study, but here is what I want you to know about the vaccine and how I came to my decision about getting vaccinated.
I'm curious too, at your hospital, Northwell is huge in New York State. And I do wonder, are you seeing now an uptick in COVID cases again, or is it a case of maybe there's cases, but they're not resulting in an uptick in hospitalizations?
So since the beginning of the pandemic, we have been very busy, to say the least. We've taken care of over 320,000 patients, performed more than 3 million diagnostic tests for the virus, and have administered more than 750,000 vaccinations. We are seeing an uptick, but not to the extent that we were 2 years ago, and we don't have our ICUs overcrowded like we were 2 years ago. So far, far less, a fraction less than where we were 2 years ago. It cannot be compared. And that is thanks to vaccinations. we would have been in a much different place had we not had these vaccines on board.
Dr. Lindsay, it's pretty incredible to see not what you've done over your career, which has spanned close to 30 years, but just over the last 2 years when it comes to vaccine advocacy. You were given I should say, the Presidential Medal of Freedom by President Biden earlier this year. Just in the last minute that we have with you, tell us about that experience and how you felt.
That is just surreal. I couldn't believe when I got the call. I thought it was a prank call until I checked my email and saw that this was real, because it was followed up with an email. And, you know, immediately I just thought about what it meant for me and my family, which is proud, but also what it means for people that I identify with: immigrants, women, Black women, Caribbean women, Jamaican. And to think that, you know, in my earlier years, all I dreamt of was becoming a nurse. No one ever dreams of, okay, I want to get the Presidential Medal of Freedom one day, at least not me. But here I was getting this high honor bestowed upon me. And I really just share this with everyone that I mentioned that I identify with, along with my healthcare workers as well, and my nurses.
And now your ID badge and scrubs are at the National Museum of American History at the Smithsonian. It's pretty remarkable. Dr. Lindsay, always great to speak with you. Thank you so much for taking the time and joining us. Dr. Sandra Lindsay, Vice President of Public Health Advocacy at Northwell Health.
All right, off to D.C. and World of National News and Nancy Lyons. Hey, Nance.
Thanks, Carol. There is a celebration underway at the White House. Cyndi Lauper was among those marking the signing into law the Respect for Marriage Act. President Biden says it means the country is taking a vital step toward creating a nation where decency, dignity, and love are recognized, honored, and protected.
Now, the law requires that interracial marriage and same-sex marriage must be recognized as legal in every state in the nation.
It does not force states, though, to issue marriage licenses to same-sex couples, but will require people be considered married in any state as long as the marriage was valid in the state where it was performed. Senate Majority Leader Chuck Schumer expects a year-end spending package will include the Electoral Count Act and more funding for Ukraine.
There's a lot of work left to do, but we're optimistic that if we preserve the good faith we've seen so far, we will get there.
Senator Schumer says they're hoping to vote on a short-term funding bill this week. After 50 years of trying, scientists at the Livermore, California National Laboratory formally announced today they have succeeded in generating more electricity from a fusion generator than they used to trigger it.
Energy Secretary Jennifer Granholm made an announcement she called historic.
Today, we tell the world that America has achieved a tremendous scientific breakthrough, one significant step closer to the possibility of zero-carbon, abundant fusion energy powering our society.
Granholm noted that commercial companies are investing in fusion energy in the hope of further breakthroughs in the next decade. In Washington, Irv Chapman, Bloomberg Radio.
In today's World Cup semifinal, Argentina easily beat Croatia 3-0. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. A volatile session in the end. An up day for the Dow, the S&P, and NASDAQ. You got to keep in mind, though, at one point we had the Dow up more than 700 points. It ended with a gain of 103 points, up by about 0.3%. Today, the S&P was up 29, up by 0.7%. The Dow up 113, up 103. NASDAQ was up 113, higher by 1%. 10-year yield 3.49%, with the 2-year yielding 4.20%. Spot gold up 1.6%, $18.10 the ounce. West Texas Intermediate crude up 2.7%, $75.17 a barrel. So stocks advanced as investors mulled whether the latest data showing prices rose less than forecast last month will prompt the Federal Reserve to alter its aggressive approach to battling inflation. Axel Merck is the president and chief investment officer at Merck Investments, and he was our guest right here on Bloomberg Business Week.
Ultimately, the question is, of course, what will the Fed do? I do think the Fed has boxed itself into a corner, and don't underestimate whatever curveball the politicians will throw out. I've been somewhat in the stagflation camp, and the reason is that policymakers tend to make things worse with the quote-unquote best intentions as we move along this path here.
Again, the 10-year yield, 3.49%. The 2-year, 4.20%. Gold up 1.6%, $18.10 the ounce. West Texas Intermediate crude up 2.7%, $75.15 a barrel. Elon Musk, once worth as much as $340 billion, has been displaced as the world's richest person by Bernard Arnault. The 51-year-old Musk has seen his fortune tumble by more than $150 billion since January to $163.6 billion, according to the Bloomberg Billionaires Index. That is less than the $171 billion net worth of Arnault, whose wealth largely derives from his ownership of fashion giant LVMH. Today, Tesla down by 4.1%. Recapping, S&P up 29, up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we continue our coverage of the collapse of FTX, the consequences, what could still come. And to that point, we dig into the beginning of the end of FTX and the relationship between Sam Bankman-Fried and Binance's, and I'm not going to say it right,
Changpeng Zhao.
Thank you.
Better known as CZ.
There you go.
Many people. You might recall, helped last month to blow the whistle on SBF's failure, CZ that is. Max Chafkin wrote all about it for Bloomberg Business Week. He's Bloomberg Business Week columnist, and he's here in our Bloomberg Interactive Brokers studio. Max, also the author of The Contrarian, Peter Thiel, in Silicon Valley's Pursuit of Power. Max, before we get to your column, which is great, I just want to hear your takeaways from today and everything that happened with John J. Ray and then what we saw from the Southern District of New York.
I mean, I think we're seeing, the first in what is going to be a really interesting, act. I mean, but everybody was sort of, waiting for this to happen, waiting for the arrest, and now we've had it. And of course, they're throwing the book at Sam Bankman-Fried. And for me, the big question is not just like what happens with his case and with FTX, because I think it's pretty clear, he's got some tough legal sledding ahead. It's who else gets roped into this. So there are other figures connected, obviously, to FTX. Carolyn Ellison, of course.
Former girlfriend of Samuel Bankman-Fried.
Yeah, ex-girlfriend, CEO of Alameda. And also kind of the person that Sam Bankman-Fried was sort of, it kind of felt like was trying to pin this all on, perhaps unfairly.
Talk about a messy breakup. No, just kidding.
Yeah, and then you have the other crypto exchanges. And, we've seen this play out before over the last few months where we have one exchange go down, one major player in crypto go down, and it's starting to suck everybody else down. People have been talking about, this sort of unfolding credit crisis, and I think it remains to be seen, kind of who else does Sam Bankman-Fried, bring down with him. And I think it's very possible because as we've seen in sort of the details of this case, these guys were all pretty tightly, enmeshed. And one of the interesting things that in the testimony that Sam Bankman-Fried, which, we and others have been talking about, he's got these text messages from other CEOs of exchanges. The title of this text message group is Exchange Coordination. It's all very weird, and it makes you wonder whether anybody else is potentially vulnerable either to like legal issues or potentially just asset prices falling and then hurting other companies.
Right, makes me wonder like how systemic all of this is and who else comes down beyond the FTX kind of universe. At the same time, it also makes me wonder about collusion, and I'm not maybe using it in a legal way, and also kind of, harken back to like robber barons where, anything could happen and people would get rid of their other competitors or smaller competitors because they wanted to own the marketplace. And I feel like that's where potentially CZ comes in.
Yeah, and you look at like why was Gary Gensler, why were people in the U.S. resistant to this, to these companies? And one reason was potential manipulation. You have these very small number of players, lightly traded currencies, and they're going around trying to pull in money from normal people, which of course raises questions. You bring up Zhao, CZ, and I think one thing that's maybe underappreciated, or two
and
things.
I know nothing, so I'm being very careful.
So Changpeng Zhao, CEO of Binance, which is the other major exchange, basically Sam Bankman-Fried's main competitor, and over the years, these two had a serious rivalry where it was kind of happening, as I write in the column today, this is all kind of happening behind the scenes, but they were both, and in Binance's case, are both operating in regulatory gray areas. So as we know, Sam Bankman-Fried, based in the Bahamas, was operating this kind of quote-unquote offshore exchange. Binance, kind of same situation, operating no one really knows where. That's the main difference. As far as we're concerned, we don't know where Binance's headquarters is, but it's the same thing where they're trading these altcoins, S-coins they're sometimes called, as well as crypto derivatives. Much of that is not allowed in the U.S., and as a result, they're in this kind of regulatory gray area, and that has left them kind of vulnerable to potential SEC sanction, CFTC, potentially even criminal investigation. What we saw behind the scenes is that Zhao and Sam Bankman-Fried were kind of vying to find a way to sort of legalize their business, to take this business from the gray area and bring it into the light. And I think that's part of what led to the conflict, and maybe even part of what led to the run on withdrawals that ultimately exposed the FTX, the alleged fraud at FTX.
Well, go back to this idea of FUD, fear, uncertainty, and doubt, because a big portion of your column today is about that. And I don't know if you've found yourself at the center of this at all, Max, but if you talk about crypto online and you express any skepticism about it, you are accused of spreading FUD, as you write in your column. So where does FUD come into this conflict?
So everybody who's anybody in crypto has thrown around the suggestion of FUD. Changpeng Zhao has a huge Twitter following. He's got 8 million or 7 million followers. I'm not exactly sure which. But he's constantly, anytime anyone writes anything negative, he's calling FUD. We saw about a month ago, it was kind of his tweet in response to these CoinDesk reports. The CoinDesk reports were about, this shaky balance sheet. Sam Bankman-Fried and his colleagues are denying it. Zhao comes in and says, hey, this looks really concerning. We're going to sell our, FTX tokens called FTT. And that sets off this run. And in some sense, right, Zhao is spreading what a crypto person would call FUD. In another sense, he's acting as a whistleblower. He's exposing a actual flaw. Now, and so I think it's important, we got to make that distinction. But since then, Zhao has kind of seemed to do the same thing to a couple of other exchanges, which is interesting and perhaps telling. He a couple weeks ago, he sort of went after Coinbase, suggesting that Coinbase was shaky. Coinbase, of course, is based in the U.S., has audited financial statements. It's a serious charge. He deleted the tweet. Same thing with Kraken, another reputable exchange, and he also deleted that tweet. And I think what's going on is you have the FTX collapse, and that's creating potential sense of panic in the market, potential legal vulnerability. Right. It's also shrinking the market, and it's creating an opportunity for somebody like Binance or Coinbase or Kraken or any of these people to consolidate and to get customers. In that sense, an opportunity, but it's also shrinking the market dramatically. Right. So you kind of have a sense the lights just came on and there aren't enough
Wow.
chairs. They're all trying to find a chair.
It is such an important point. Go to Bloomberg.com, check out Max's story. We got to run. Max Chapkin always giving us something else to think about. This is Bloomberg.
It is 4:53 on Wall Street. I'm Charlie Pellet with today's company headlines. Twitter has not paid rent for its San Francisco headquarters and all of its global offices for weeks, this according to the New York Times, citing 3 unidentified people close to the company. Moderna shares surged today, up 19.6%. Its experimental personalized cancer vaccine reduced the risk of relapse or death from melanoma when combined with Merck's Keytruda in a mid-stage trial. The 2 therapies cut the risk of death or recurrence of the lethal skin cancer by 44%. The drug makers plan to move the combination into final stage studies next year. Stéphane Bancel is the CEO of Moderna, and he spoke this morning with Bloomberg Radio.
Basically, what we have to do in 2023, based on this great data, and we know it's real because the p-value is very statistically significant, is we're going to start a phase 3 in melanoma in 2023. I guess it's going to take 12 to 18 months to enroll, and then we need to wait 12 months to get 12 months of survival data, and then file this to the regulators. So that's a couple years away.
And again, Moderna up today by 19.6%. Apple is preparing to allow alternative app stores on its iPhones and iPads, part of a sweeping overhaul aimed at complying with strict European Union requirements. coming up in 2024. Apple shares today higher by 0.7%. And those are the company stories that we're following this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Massar live in the Bloomberg Interactive Brokers studio. Let's get to world and national news. For that, we turn to Nancy Lyons in our Washington, D.C. newsroom, 991. Hey, Nance.
Thanks, Tim. The Respect for Marriage Act has been signed into law. House Speaker Nancy Pelosi spoke at the White House ceremony this afternoon.
It is a thrill that, protected by this landmark new law, millions more devoted partners be able to shed a tear of joy as they make their wedding vows, celebrate the union with ones that they love, and live happily and safely ever after with the person they love.
The law requires states recognize same-sex and interracial marriages across state lines. President Biden says he is encouraged to see that consumer prices are easing down sharply from October.
My goal is simple: get price increases under control without choking off economic growth.
Asked today when he thought price growth would be back to normal, Biden said, quote, "I hope by the end of next year." Federal prosecutors say the former CEO of FTX, Sam Bankman-Fried, and his partners stole billions of dollars from customers over the last 3 years. U.S. Attorney Damian Williams runs down the list of charges.
Defrauded customers at FTX.com, defrauded lenders to Alameda Research, defrauded investors in FTX, violated campaign finance laws.
Williams says the investigation is ongoing and moving quickly. Elon Musk has been displaced as the world's richest person by part owner of LVMH, Bernard Arnault. According to the Bloomberg Billionaires Index, Musk's fortune has tumbled by more than $100 billion since January. The Ford F-150 Lightning pickup is the Motor Trend Magazine 2023 Truck of the Year. It becomes the first all-electric truck to win that honor. And Team Argentina, led by Lionel Messi, is advancing to the World Cup final with today's 3-0 win over Croatia. Messi tied the record today for the most World Cup matches played at 25. He has never, though, won the title. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. We're going to stay in D.C., check in with our Joe Matthew, host of Bloomberg Sounddown, coming up in just a few minutes. Joe, what's on tap today?
Well, you know, there's really only one story today, right? It all comes down to FTX. What the heck is going on with SBF?
We did have a pretty impressive CPI. I'm just going to put it out there.
Well, you know, we're going to get to that too, actually. But my goodness, did you hear Joe Biden issued a forecast for inflation? I bet they didn't want him to answer that one question while he was leaving the room. But we have two members of the House Financial Services Committee who spent the day questioning this new CEO of FTX. We have a D and an R. They don't agree on everything in terms of crypto regulation and what exactly to do in this case. And that's where we'll start coming up in just a couple minutes.
That's fascinating. I mean, I think we were all glued just watching some